All right, yo, what's good for everyone watching this on the replay? I hope you're having a great day. I'd like to start these streams off by going over a quick portfolio update. So I'll share with you every stock that I own, how much I'm up and down and stuff. And then we'll dig into some of y'all stocks and some stocks I think are pretty good to buy the dip on. Like some of these I own, like Amphenol. These stocks are really cheap. Constellation Energy's down 6%. So yeah, anyway. Here's my dividend only portfolio. That's what it's called in the top left because every stock in here pays a dividend, but most of these are like dividend growth companies like Google. Man, Google has been just a winner this past year. Just since exactly 1 year ago, Google is up 147. And we're not even up as much as Google. We're only up 144, but that's still an incredible return for just a year's time. I mean, technically, you should get 10% of your money back a year with the S&P 500, and here's Google doing 14 years of S&P 500 returns just in a year. So I'm really impressed. This is why I love individually stock picking, as you can buy these safe, high-quality stocks and get better returns than the actual index. But that being said, we have not outperformed the index so far. Like, check this out. Year to date, we're up 0.8. And over the past year, we're only up 16%. If we compare that to the S&P 500, the S&P 500 is up 27% year to date, or the past year. So it's doing a little bit better than me. But hey, I'm still not going to complain about a 16% return. That's not too bad. And yeah, here's our total percent change in every stock. The only stock we're down on right now in here is McDonald's. We're down 2.5% on them, but no big deal. Meta, we're I'm going to come back on, and Constellation Energy is down 6% on the day, and there's no specific news. There's no news. It's just momentum. They're now trading at like a 22 forward PE. It's like ridiculously cheap. Hey, what's up? I knew. Yeah, we'll check out AMFN after this. Yeah, here's my Roth IRA. A Roth IRA is just a tax-free retirement account, and these are all the stocks we own in here. Probably a lot of these you've never heard of before. A lot of these are like risk on, like I got Webull, Cormetics, InnoData, Cavco, some of these random stocks. But I like the fundamentals here. So yeah, that's our Roth IRA. But our other account, this is our risk on portfolio. We're down 0.09% on the day, and here's our total open profit and loss. We're only up 21% all time. And hey, what's up, unboxing? So yeah, we're only up 21% all time. Definitely haven't outperformed the market, but here are all our top performers on the day. Looks like Futu's having a phenomenal day, up 4.6. PSIX is recovering, up 17. Ouster's up 20%. I can't believe this. This is our actually most recent purchase. There's my buy order. We bought this stock like a month ago, and it's crazy. We're already up 80%, and they're up 21% just on the day, so that's pretty impressive. But we do have some big losers. It seems software is really falling. UiPath is down 5.6. AppLovin's down 5, Clear Secure, Uber, Progressive. So yeah, SoFi. Actually, SoFi is one of the best stocks in the market to buy now. And hey, what's good, Cyber Ninja? He says there's a bunch of nuclear news. I did not hear about that. What's the nuclear news? And then we have finally our last account, I promise. This is our Moomoo portfolio. In the top left, it is called our buy and never sell portfolio because once we buy a stock in here, we never sell it. We're not allowed to trim it. So like Powell Industries, we're up over 1,000%. We've never sold or trimmed a single share ever. Comfort Systems, we're up 20K. They're actually at an all-time high today. I'm actually super close to an all-time high, just a couple bucks off. I'm really impressed. These are like your AI infrastructure companies. Amphenol, I think, is a steal of a deal right now. They're at a 23 forward PE. It can't get much cheaper than a 23 forward PE. That's why I'm so bullish on this dip right here. I'm actually about to buy another share of Amphenol stock, best believe. All right, so let's see. I knew it. He says wait, what did he say? AMF in stock? American Fusion Inc. I've not heard of this company before. It looks like it's some recent IPO. I would be careful because they're only worth $400 million, but they're up 27% on the day. So obviously there must be some sort of good news there. I think this is a blank check company, or I don't know what this company is. No, it's not. So it has 7 employees. Is an advanced energy and technology company. Focus on the development and commercialization of proprietary fusion energy systems. Maybe we can check out their website right here. Here's their website. Any specific how Textatron compares to nuclear power? Okay, so some sort of alternative energy fuel company. Looks like they actually don't have any revenue, and there's no S&P Global analyst covering this company. See at the bottom, this is from 2008, so this isn't recent data. Yeah, so actually, I wish I could give you thoughts on this company, but there's just nothing for me to really look at there. I apologize, but I guess we can kind of figure out what they do. Hey, what's up, Sked? He said, look at RVI. Yeah, check out RVI. This is the Robinhood Venture Fund. It basically owns a bunch of private equity companies. It's owned by Robinhood. Robinhood, the brokerage I'm on right here. Wow, it's up 33% just on the day. 113% the past week. Look at the NAV in the top left, the net asset value. The net asset value is $25 and it's 71. So it's definitely pricey, but here's what it owns. A bunch of private equity companies like Databricks, Air Wallets. I don't know what some of these. Aura, that's the Aura Ring company. If you heard of the Aura Ring, that's 7% of this holdings, right? Or it has 10 holdings total. So anyway, those are the 10 stocks that it owns, private companies, but it's your way to get exposure to those private stocks. Kind of cool. I think they're eventually going to own like OpenAI and Anthropic and SpaceX in there. I don't know. Hey, what's up, Low-Key Fish? Is the CEG dip worth buying right now? Yeah, let's check out CEG right here. So this is your nuclear company. This stock right here literally owns 33% of all the US's active nuclear reactors. Okay, so they filed for some debt. I mean, there's no real bad news. Okay, Constellation Energy awaits NRC decision on 3 Mile Island nuclear plant restart. Faces potential grid interconnection delays, which is no big deal because that's just one reactor. But yeah, so they look at this, affirms full year guidance of $11 to $12 per share. So let's go on the high end. Let's do $12. So we look, the current share price is $275. So we'll do 275 divided by 12. So that's a forward multiple of literally a 22.9. So this company, the nuclear behemoth, is trading at 23 times next year's net income. So that seems pretty fair to me. And here's the actual S&P Global forward PE. Yeah, it lines up with what we said, a 22 forward PE, which means they trade at 22 times next year's net income. And this was actually the most profitable quarter they ever had. If we zoom out, the revenue grew. This was from an acquisition, but revenue grew 63. And the net income was $1.6 billion. I think that's the highest net income quarter they've ever had. Single most profitable quarter. And this was real. This is the after-tax number, 1.6. Before tax, it was 2.27. So that really was a real $1.6 billion in net income. It wasn't some one-time adjustment. So I'm really impressed with CEG. Nothing scaring me out of this news. Someone was saying that there was some nuclear news. Maybe I missed it in the chat, but yeah, I'm still really bullish on the nuclear sector. You know, it's the cleanest form of energy, and that's what data centers want right now, nuclear energy. And they literally own 30% of all the US's nuclear reactors. And I do own this company, full disclosure, so I might be biased. I am biased, but I got 15 shares and I'm up 34%. I got in at a really good cost basis, so I'm still up 34%. But yeah, they also pay a nice dividend. They do share buybacks. They do synergistic mergers and acquisitions. So pretty cool from CEG. Google's having a great day. I think they're close to an all-time high. Let me actually just check up on the market really quickly. Here's our portfolio. We're having a recovery. We're only down 0.33, and that's definitely underperforming because the S&P is up 0.5%. So the S&P is up 0.5%, and well, we're down 0.32, mainly from Constellation Energy. That's the big dragger, but that's just one of our portfolios. Next up, let's see. Do you have a Discord? Yeah, I do. But it costs $1 to join, or you have to be a YouTube member, simply to keep the bots out. Hey, bro, just wanted to say thank you for putting me on Powell Industries. Dude, heck yeah, I'm glad you own this company. Yeah, I'm a believer of the whole electrification super cycle happening. You know, instead of just owning Nvidia, you know, the picks and shovels company that sells the GPUs, instead of just owning Nvidia, why not own the whole ecosystem? You could own Comfort Systems that does the HVAC work, the heating, ventilation, air conditioning. Powell Industries right here does the complex MEP work, the mechanical and complex electrical work for these data centers. Constellation Energy owns the nuclear reactors that are powering the GPUs. We have Amphenol right here who supplies the copper cables to Nvidia and Google for their TPUs. So I'm a whole fan of the whole, you know, AI ecosystem. What's your favorite brokerage? This one I'm on right now called Moomoo. Actually, if you want to get this app I'm on, I have a affiliate link in my profile bio there. So hey, what's up, 2Trick? He says, my man, are you still holding ADMA? I actually do not own that one, but I was really impressed with their earnings. So look at this. This stock is down bad, like in terms of stock price, but here's the interesting part about this company, and they really do trade at only a 9 times net income. So they missed on revenue. This was the real reason they fell. Look at this big revenue miss. Analysts expected them to report 139 million. They only reported 115 million, but here's the good news. They still made 45 million in net income, which was an actual margin expansion. So the revenue slightly declined. So revenue's down 0.2, but the net income is up by 68. And that's not some one-time adjustment. That's really real that the profits grew that much. So when we go to basic metric here, gross margin's up 32 and net margin is up 69 to a 39% net margin. Incredible margins here. So I think the only bad news is the slowing revenue growth. That's the one thing scaring analysts right now, negative revenue growth. But I think the worst is mostly priced in. I wouldn't be shocked to see this one be very close to a bottom. That being said, it's a really risky one. You don't want to put a lot of money in. I know there's a lot of shorts. Yeah, check that out. 8% of all the shares are being shorted. But yeah, dang. So they're the same prices they were back in 2024. But yeah, I was happy with that margin expansion. Hey, what's up, Fred? Have I missed a lot? No, hey, we just started the stream 10 minutes ago. How's it going, everyone? Hope everyone's having a great day. Hey, POJ, dude, thanks for that gift there. If you have a stock you want to look at, let me know. So I see some people asking about Salesforce. Yeah, let's check out Salesforce, Adobe. This is one of the main software companies falling because of Anthropic. Anthropic, Claude Code made this Salesforce replica, and now now the sentiment around Salesforce is bad. That's the only bad thing is the sentiment, because the actual financials and the fundamentals, they beat on expectations every quarter. Salesforce reports fiscal year 2026 revenue of $41 billion, raises full year 2030 target to $63 billion. So $63 billion of annual revenue by 2030 is what they guided. So it's at currently for the fiscal year 2026, they did $42 billion of revenue, and they just gave guidance of $63 billion for the full year 2030. So 4 years away, that could justify a higher multiple. If they're having that sort of growth, maybe Salesforce deserves to have a slightly higher multiple than a freaking 18. Yeah, look on the right. Salesforce only trades at 18 times next year's net income. Yeah, they're in services, sales. I love Slack. That's actually this segment right here. Slack is growing like a beast recently. That's up 39% year over year. After grew 15. So actually, look at the very top here. That's the highest growth rate on the entire screen, 38% year over year. Maybe that was from an acquisition, but either way, I like that growth over there. Integration, analytics, marketing, commerce. So they've been beating on expectations, and that's real as well. Analysts expected 1.54. They did 1.94. They beat on net income for the past 3 quarters in a row, yet the stock falls anyway just because of poor sentiment. So that's the one thing you do got to just keep in the back of your mind, that the AI thesis could hurt this one. And that's why I wouldn't have this one as a crazy big size position. I'd still have it as a position, but not a huge one, just in case. You get a 1% dividend, that's actually not too shabby, over 1% of your money back in a dividend every year. But yeah, it seems the market is not happy with software right now, and that's like a pure software company. All right, can you check MVIS? Yeah, hey, thanks again for that gift there. What is this one? Microvision. I would be careful here. Yo, what's up, Jonathan? Felicito, Marcus, Millennial. I'm sorry if I'm a little behind on chat here. I apologize. Yeah, I would be really careful with this stock. If you look in the top right, they're only worth $250 million. That's just such a small market cap to really trust. And actually, dang, if we zoom out, this stock is lower than they were in the year 1997. So if you bought the stock in 1997, you're actually down on your position. So sale and servicing of LiDAR hardware and software. So they're a LiDAR company with no revenue. So I actually own a different LiDAR company called Ouster, but check this out. This company has no revenue, $220K of revenue, and it's down 88% year over year. So the sales are declining from what they used to be. So no wonder this stock is at an all-time low. They basically have no revenue, and dang, remember the whole company was worth $300 million? They lost $37 million just this quarter, which is over 10% of the whole market cap, plus another 14 mil, which is 5%, 14 mil, 30 mil. So definitely would not buy that stock. Unfortunately, the financials there are just too scary to actually trust. You know what I mean? Hey, what's up, Lost? Lost in the sauce. All right, so let's see. Micron at 650. Is that one good? So yeah, Micron, I wouldn't exactly buy now, but I also wouldn't trim or sell. Here's the crazy thing. A lot of people might call me crazy, but here's the actual numbers for yourself. They trade at a forward PE of only 8.4, which means they only trade at 8.4 times next year's net income, which is ridiculously cheap. And here are the actual forecast. Next quarter, they're supposed to make $22 billion in net income, and then the quarter after, $26 billion in net income, which that annualized is $100 billion a year. and the whole company is worth 896 billion. So yeah, analysts are right when they say they traded only 8.5 times next year's net income. And I just have a feeling like it could stretch up higher. This could stretch up to like a 12 or 13 forward PE before it fully maxes out. You know what I mean? So that's why I wouldn't really trim Micron. And this kind of just trades off the sentiment around the whole industry, the memory supply chain and the administration. Yeah, if you kind of look in the middle, administration plans to help out the supply chain to stop these crazy high RAM and memory storage prices. So yeah. All right. What platform are you using? Yeah, hey, this platform I'm on, if you'd like to get it, it's called Moomoo. Link in my profile there. Can I get your thoughts on JEPQ? Yeah, there's so many stocks. I apologize if I'm missing some here. This is a covered call ETF. You buy this to maximize your income. So this just sells calls on the NASDAQ. It has a 10.3% dividend yield. I personally would not sell calls myself on the NASDAQ, but because it's always going to get called. That's why the yield is so high, because you're for sure to get called because it's the NASDAQ. But yeah, you buy this to maximize your dividend income. You will not total return outperform the S&P 500, but you still get some good, and those technically aren't dividends, they're distributions. So whenever you receive those, they're not taxed like a dividend. They're not taxed at long-term capital gains. They're taxed at short-term capital gains. So it's actually a distribution. Nebius reported this morning, hey, that's an Nvidia company. Whoa, up 17%. You know what? So check this out. If we go over here to the Nvidia portfolio, because Nvidia is so big, they literally own some individual companies. One of the stocks they own, it's actually one of their smaller holdings, but is Nebius. It's one of the data center companies. So let's see. Is there any specific? Well, they reported earnings. Let's see. Let's just go look at their actual numbers. So the analysts expected 388. They did 399 mil of revenue, and they still lost 128 mil. They had a little gap adjustment. It says they made 620 mil in net income. They didn't actually. The actual business lost money. Okay, so the numbers haven't loaded in down here, but anyway, they must have had some sort of good guidance to send them up that much. I don't know. I do think this one is really overvalued. There is no forward PE, so they're not expected to make any net income anytime soon. Again, they didn't actually make 600 mil this quarter. Next quarter, they're supposed to lose 310 mil and then 320 mil. Any stocks to buy? Can you help? Yeah, hey, I can't help with that. None of this is financial advice, but there are some stocks that I do like right now that are cheap. Meta's really cheap. Meta's at a 19 forward PE. These are the best stocks to buy right now. I think Meta is a steal of a deal, and I do own them, so I might be biased, but I own them for a reason because they're so great. Actually, I had a little list over here of stocks that I think are pretty undervalued. Where are they? Oh, ISRG. This is a healthcare robotics company with no debt, fortress balance sheet. Amphenol. This is a copper cable company. Maybe I'll actually analyze this one right here. Hey, thanks, Happy Me. I am. Thanks for those gifts there. I do appreciate you. So let's see. Lucky said, can we look at CPRX? What is CPRX? Catalyst Pharmaceuticals. Yeah, actually, this one's done pretty good. It's at an all-time high. So if you've ever bought this stock, congratulations. You're definitely up on your money. Oh, it looks like they're getting bought out. Okay, so whenever the stock chart, like if you go to the 5-day chart here, whenever it's kind of flat like this, that means they're getting bought out by a company. So I wish I could give you, so they're not providing any more forward guidance because they're being acquired. So let's see, are they a profitable company? So yeah, they sell a bunch of different prescriptions like Firdapse. How's that one growing? Yeah, I mean, it grew 18% year over year, after grew 18, after grew 15. So that's a nice growth rate. That one's up 67. Holy schmoly, 67. Pretty good growth there. So yeah, they actually make good net income. Wow. They made 63 mil in net income on 149 mil of revenue, which means their net margin is a 42%. That's actually ridiculous. So I can see why they're at all-time highs, but they're being acquired. So there's no real reason to buy them. Hey, Carly, thanks for that. All right, I'm so behind here. Fred said McDonald's. That's one of my favorite stocks to buy right now. It's a cheap dividend stock and it's a blue chip, one of the most blue chip stocks out there. And it's not just McDonald's that falling. There's a whole industry food-wide sector decline. So like if we go to Wendy's right here, look at Wendy's stock. That one looks pretty devastating. Lower than they were when they IPO'd in 1997 at $14 a share. Jack in the Box is no exception either. This stock is the same price as they were back in 1999. Look at like a General Mills, like a consumer package one. Like look at General Mills. These are devastating losses, and it's just sentiment around like Ozempic. Ozempic is going to slow down spend on some of these, which I can understand. But I think out of all the food stocks to buy, McDonald's is best positioned because they're really not a restaurant. McDonald's is actually a real estate and royalty company. McDonald's owns the land under 80% of all the franchises, and they also collect a 4.5% sales and marketing royalty on every transaction. So yeah, you get a 2.6% dividend yield. I actually own them. They're my second largest holding in here. They're a pseudo REIT pretty much. They'd be in the top 5 largest REITs in the world if they converted. So yeah, I am down 2.3%, but I love the dividends and I have been buying more McDonald's. So yeah, pretty cool company there. Hey, what's up? The U.S. Department of Energy considering plan to offer utilities billions of financing. Oh, cool. Black Horse says Devon Energy. What's that one? Hey, can you give me the ticker symbol? If you have a stock, please give me the ticker symbol. You think it's a good time to buy Lending Club? Hey, what is that stock too? Maybe I can type it in. LC Lending Club. Huh. Well, for some reason, I guess I was comparing this at one point to JP Morgan. So here's Lending Club. What do they do? So they're a regional bank. Okay. So they're a bank. Lending Club Bank. Huh. How much net income? Actually, they're making good money. Yeah, they're making like 50 mil in net income a quarter now. Analysts are projecting them to continue this, make 58 or 48 mil next quarter, 52 mil in net income the quarter after. So actually, they print money and they're only at an 8.4 forward PE. So that's surprising. They have done bad for a bank despite pretty good numbers. I mean, they're beating on expectations every quarter. Yeah, for the past 3 quarters in a row, they've beaten on revenue every quarter and on net income every quarter. The stock has just been flat. Wonder why. Can I get your opinion on Snapchat stock? Yeah, hey, out of all the social media stocks to buy, I think Meta and Reddit are the best. I kind of stay away from Snapchat. I'd stay away from Pinterest. I'd stay away from Yelp. I think Snapchat is one that's a tough one to buy. Here's a cool metric, though. We can see Snapchat's daily active users. They have 483 million daily active users. I know they're introducing some subscription thing. Snap CEO reports nearly 75 of U.S. chat daily active users viewed ads in Q1. Snap reports a 25 million revenue impact from Middle East conflict. Snap and Perplexity AI mutually terminate 400 million partnership. Snap faces North America headwinds and forecasts 1 million daily active user decline. Okay, well, anyway, let's go look at their actual numbers. The tough part is just the net income on this company. I mean, they just kind of for eternity just lose a bunch of net income. As a shareholder, you don't get any voting rights. So, I don't know about this one. I mean, the way I'd value a stock is look at a forward PE, but there is no forward PE, or the forward PE is negative. So that's not what you want to see. Actually, Morningstar says they're reasonably valued. Intensifying competition from vertical video peers and declining daily active users in highly monetized geographies require caution. So yeah, I definitely want to be cautious with Snapchat. You wouldn't believe the growth that Reddit is experiencing, and Meta. Meta grew 33% year over year, their revenue. Reddit grew at 70% year over year. So I'm really impressed with those other two. Stay away from WOK. What is that one? Work medical. Yeah, we're not going to cover this one. Yeah, definitely don't touch this stock. If you look in the top right, who's buying this? This company in the top right is worth $3.3 million. I mean, this is like a day trader's dream or something. But yeah, don't buy this company. They have no revenue, lose money. Yeah, I definitely stay away from that one. All right. Oh yeah, what app is this? Yeah, hey Kyle, this app I'm on, or it's a brokerage where you buy stocks on. It's linked in my bio there if you'd like to get it, or you can type it into Google. It's a brokerage called Moomoo. So Vertiv, what up? And I'm so behind here. Please forgive me. What's up, William? I want to get to SanDisk, and Marcus said Waste Management. MRAM. What's MRAM? Is this another like Micron stock? He says it's a 4x this month. Yeah, actually, all the memory stocks have been on fire, like a SanDisk, a Micron. So yeah, all these charts look very similar. Like all these are at an all-time high today. This one, okay, so there is some revenue growth. Revenue is supposed to hit 18 million in 2 quarters, so that'll be a record revenue. And they're actually making money. Like they're not losing money on average. They're actually slightly making money every quarter on average. But yeah, still one not out of all the memory stocks to buy. I don't know if I'd buy that one. I'd probably trust Micron some more. Let's check out Vertiv right here. This is a really cool data center cooling company. So I love the HVAC companies, kind of like Comfort Systems as well. Let's see if there's any news. So raises price target to $400, and it's a $370 stock today. They're expensive though. They definitely deserve to be expensive, but you can't buy it today. If you look at on the right there, they're trading at 60 times next year's net income. So that's pretty expensive, 60 times net income. But here's the good part. They have insane revenue growth and margin expansion. Yeah, if we zoom out on the revenue's at a new record, up 30% year over year, all organic. So the revenue's up 30, the profits are up by 50. Yeah, look at the actual net income. It's the most profitable they've ever been. These year over year growth rates are phenomenal. So yeah, gross margins are up 11 or 12% year over year. Net margins are up 82% year over year. So the free cash flows at a record too this quarter. So I mean, they definitely are they're not at all-time high just on momentum. They're at all-time highs because the fundamentals are at all-time highs as well. So I'm impressed, but a 60 forward PE makes it very hard to buy. And I own a stock that does pretty similar stuff, Comfort Systems. This one's also at an all-time high right now. All these kind of AI infrastructure stocks are doing really good lately. Hey, thanks, Happy. I appreciate you. Next up, I see. Can you go over a list of undervalued stocks you were talking about? Yeah, the undervalued stocks, I don't really have a specific list here. Well, Amphenol's one of them, Meta, Microsoft. There's some names in my Webull portfolio that I think are cheap too. Let's see here. But, not all of them are for everyone. I think Uber, Microsoft, AppLovin. AppLovin was down, 5% on the day. I'm looking to actually buy more shares of AppLovin, one of my favorite software stocks. But yeah. Progressive's pretty cheap, but yeah, Amphenol right here, APH is one of my favorite stocks to buy now, and I'm actually about to buy some after the stream ends. So yeah, SanDisk, another memory shortage one. Here's the thing. Here's why, honestly, these memory stocks, specifically Micron and SanDisk, are probably just going to continue to climb higher. Here's my quick thesis on that. Simply valuation. If we go to this company's next year's net income multiple, this stock, even at all-time highs, only trades at 8.6 times next year's net income. I feel like that could easily go up to a 10 or a 12 before it maxes out. So even though this stock is basically at a crazy all-time high, I think it could still go up another 20, 30% or 40% before it maxes out, and it'd only be at a 12 forward PE. But this stock really trades off the supply chain logistics. Like if the supply chain fixes itself and prices go down, that would be bad. Michael Burry warns SanDisk 3,900 surge exceeds dot-com bubble peak, raises valuation concerns. Uh-oh. But anyway, yeah, it's hard to be super bearish when the forward PE is an 8.6. You know what I mean? Someone said Ford. Yeah, Ford, that's not one I love, sadly. Oh, wow, they're up 12% on the day. Is there any specific news here? I bet they reported earnings or something. Ford develops universal electric vehicle platform for $30,000 mid-size pickup. Targets break even by 2029. That's not great. That's the one tough part. This is a very low margin industry. Even Tesla's super struggling. Tesla's lucky to have a 3% net margin. Ford launches Ford Energy subsidiary. Canada grants Ford $350 million for Super Duty truck production. So anyway, the bad part is it's just a low margin commodity business, and it makes it a tough sell as a stock. If you didn't know, Ford, if we just zoom out, Ford stock is lower than they were in the year 2000. In the year 2000, this was a $25 stock, and it's a $13 stock today. Oh yeah, when I got this brokerage, they gave me a free stock or a couple free stocks, and one of them was Ford. I kind of instantly sold it. So that's why there's a sell order there. Yeah, if you want to get this app and get some free stocks as well with my affiliate link, I have it linked in my bio, my profile there to get this brokerage. My favorite app to buy and analyze stocks on. Next up, I see CrowdStrike. Yeah, who else? I think Nancy Pelosi is a big CrowdStrike holder. All these super investors, when their net worth is over $100 million, they have to disclose all of their holdings and trades by law. So actually, I'm not seeing CrowdStrike in her top 10 holdings anymore. Did she sell out of CrowdStrike? Bro, I swear she used to own CrowdStrike. She owns Palo Alto Networks. Oh, well. Anyway, this is probably the most high-quality cybersecurity stock out there, and I'm a big fan of cybersecurity. Out of all the software stocks, software sectors, I can kind of see where they're coming from, how Adobe and Duolingo might get hurt, but I don't see CrowdStrike getting hurt as the best cybersecurity company that over 60% of the S&P 500 uses. It's incredible, but they're extremely expensive. It's a subscription model company as well. So subscription revenue and annual recurring revenue reached record highs, driven by strong demand for AI enhanced security. Profitability improved, cash flow was robust. Nice. So yeah, actually, Morningstar says they're fairly valued. Robust adoption of their Falcon platform and AI-driven network effects will drive long-term value growth within a rapidly evolving cybersecurity landscape. So yeah, check this out. This is a subscription model company. 95% of the revenue comes from subscription, and this is what you want to see. Analysts love subscription model companies. It's all reoccurring and predictable, and it just hits a new record every year. Full year or fiscal 2026 was up 21%. So phenomenal. I know they're still struggling to get net income positive because they're still seeing some lawsuit payouts. Like they used to be profitable, then they got sued a bunch from that outage. But now they're finally over that. Does anyone remember that? I actually made a TikTok about it back down here. They basically gave out this cybersecurity update, and anyone with that program on their Windows computer, it bricked your PC. You actually had to go to the store and fix it, and it caused every airplane in the sky in the U.S. have to land because of that. And so many other disruptions that day. I actually have a TikTok about it. It's one of my oldest TikToks and YouTube Shorts, the day that happened. All right, so next up, and I'm so behind, so sorry for everyone if I'm missing out on some of your stocks. Nokia, sir. Yeah, hey, Nokia, that's another Nvidia holding. If we go to the Nvidia portfolio right here, I'm actually surprised Nvidia decided to own some Nokia stock. And wow, they've had phenomenal momentum at a new multi-year high right now. How are they doing? Nokia launches agentic AI capabilities for home and broadband networks. Nokia reports profit of 281 million euros, beating estimates with 49% AI and cloud business growth. Nokia and Lockheed Martin launch 5G solutions for US and allied defense forces. Pretty cool. Anyway, yeah, it's good to see that their cloud business within its network division achieved 49% growth, and that's now 8% of all their sales. So it looks like this cloud and network services is really picking up the slack, is what it sounds like. I don't know. They're still pretty expensive at a 43 forward PE, but look at how that improves from its current 82 PE. It's basically getting cut in half in just a year. What are the net income forecasts? So yeah, they're actually a money printer. They're supposed to make 260 mil in net income next quarter, 395 mil in net income the quarter after. Very profitable. What app is this? Yeah, hey, Dot, or whatever your name is. This is a broker where you buy stocks on brokerage. It's actually linked in my profile description there if you'd like to get it. Or you can just type into Google. It's called Moomoo. Broker called Moomoo. But yeah, linked in bio. All right, next up here we see... actually, these are some good ones. Can you look at Novo Nordisk? Yeah, what's up, Marcus? So Novo Nordisk, this is your weight loss company. If you've heard of Ozempic, Elon Musk is on Ozempic. It's like a weight loss prescription. If you've heard of Wegovy, this is the company that owns that. And is there any specific news? Okay. Novo Nordisk set up trial data showing Wegovy 7.2 milligrams achieves 27.7% weight loss in early responders. That's great. Novo Nordisk reports Wegovy achieves weight loss goals. Positive phase 3 trials. Okay, cool. Let's go look at the fundamentals though, because there is some bad news. So they own something called Ozempic. Whoa, how is this even possible? Do y'all see my screen right here? Your live contains themes, body exposure, and that behavior. I need to appeal that. See, this is why TikTok is always get on my nerves. If y'all want to help me out, please watch the stream from YouTube. I'm actually going to have to end the stream on TikTok in a little bit, but I will be permanently continuing the stream just on YouTube. My YouTube channel is called Nathan Robert. You can just type it into YouTube, Nathan Robert. You'll find it. But yeah, in about 10, 20 minutes here, I'm going to end the TikTok stream, unfortunately. But anyway, here is Novo Nordisk. Here's the bad part. The forward PE is much higher than its trailing 12 months PE. What does that mean in English? That means the net income is going to fall. Oh, actually, so they just had a one-time adjustment this quarter is what it looks like. So yeah, it says they made 7.5 billion net income. That's definitely not true. Because the EBITDA was 5 billion. So they had some sort of one-time adjustment because they missed on revenue. So they missed on revenue. Yeah, analysts are forecasting negative revenue. Revenue is going to go from 11.8 to 11.2 billion year over year. But that's why the stock is down so much. So I feel like it's fully priced in a lot of these fears. There's a lot of increased competition from Zepbound, and also the other sort of bad news is I forgot to say this because they cut off my eligibility, but Novo Nordisk they own Ozempic. They lost their patent in Ozempic this year, in March of this year, in India, Europe, and China. And there's already so much increased competition in general knockoffs, generic knockoffs in like India and stuff specifically. So that's the one bad part is they lost their patents, their exclusivity on their weight loss prescription. And that's kind of like their secret sauce. So that's kind of a nice dividend play. If you look at the dividend, a 3.85% dividend. Another potentially better play might be Eli Lilly. This is the one that's kind of the number one weight loss company right now with Zepbound. Is there any specific news around this one? Eli Lilly. They're in so many different prescriptions. So there's just so much good news right here. Eli Lilly launches Alzheimer's prescription in India at 91,000 rupees per vial. All right, anyway, let's go look at some more stocks here. So next up, I see, Nokia is up 10% today. Ondas earnings tomorrow. Hey, if you want me to check out that stock, please give me the ticker symbol. We'll check it out. Meta, yeah, dude, that's what I wanted to cover because this is a stock you can't go wrong buying. I really mean this, not financial advice. This is one of the best stocks to just park your cash in right now if you're looking for something to buy. So Meta, this is a advertising company and an AI company. So I like what they're doing. Meta has the Meta Ray-Ban glasses. See, look at that. Meta collaborates with Qualcomm and with OpenAI on AI wearable hardware. So they're not actually just making the Meta Ray-Ban glasses. They're making the Meta smart watch. So they're making a smartwatch as well. I feel like the smart glasses are going to be huge. Like Google's getting into the smart glasses industry. Meta launches a USDC stablecoin via Solana and Polygon. Oh, that's kind of cool. I guess there's some crypto news. Anyway, check out Meta right here. One bad news is that they're spending more than they're making on AI right now, but that's why the stock is struggling, and it's not scaring me out of Meta. You know, they spent $34 billion this quarter, $34 billion last quarter. That's more than they're making. They make $22 to $25 billion a quarter, so they're spending slightly more than they're making, but it's paying off. This is the highest growth rate on the whole screen. The organic revenue grew 33% year over year. That's phenomenal, 33% revenue growth. And they have a bunch of daily active users. Pretty much half the world is on a Meta app once a day. They have 3.54 billion daily active users. And actually, they just disclosed they make $50 per year per Facebook user. They have a $50 ARPU. They collect Instagram ads, Facebook ads, and they're now introducing ads onto WhatsApp and onto Threads, if you heard of Threads before. It's like an ex-competitor. So I'm just a big fan of Meta. And the valuation just can't get much cheaper than this at a 19 forward PE. There's no world that Meta trades at like a 15 forward PE. So like the bottom is really close on Meta, I think. All right, what app is that? Yeah, hey, Beckett, this is a brokerage where you get stocks. If you'd like to get this app, it's in the link in my bio there, my profile. Next up, SaaS, please. Hey, Milgon, if you have a specific software as a service stock you may look at, please give me the ticker symbol and we'll check it out. Riot, yeah, this is a Bitcoin mining company, I believe, and they're slowly converting from a Bitcoin mining company to a cloud company. Partners with terrestrial energy to develop nuclear-powered data centers. Okay, let's see what they do because I think this is okay. So yeah, 66% of this company's revenue is still Bitcoin mining, but look at that, and then they're in engineering. That grew 97% year over year. And then they also have this data center hosting. This is just renting out their GPUs. Basically, this company owns a bunch of Nvidia chips, and most of them just mine Bitcoin. But now they're actually renting out some of the graphics cards to cloud companies. That's what it seems. Looks like they're not really profitable. Dang. So they lost 500 mil, 600 mil last quarter. They're supposed to lose 50 mil next quarter and 90 mil the quarter after. So it's tough because these aren't really profitable. So the way I normally value a stock is look at a forward PE, but there is no forward PE, unfortunately, because they're not supposed to make any actual profits anytime soon. And I don't really love owning companies that don't make any profits. But yeah, this one basically, though, kind of just trades off Bitcoin. It's kind of like a high beta Bitcoin, kind of follows what Nebius does. I don't know. McDonald's is a great buy. Just bought $5,000. Hey, Fred, nice one, man. I think you can't go wrong buying McDonald's for the long run. Hey, what's up, Sermon? Oh, I see HIMS. Oh, yeah, we got to do HIMS and waste management and Adobe. Oh, we'll check all these out. What's up, Lauren? We'll look at Taiwan Semi, AMD, Nvidia. We'll look at those too. So here's Hims and Hers. This is a healthcare company. They had some really bad net income numbers this quarter, reported a Q1 loss of 40 cents a share, missing revenue estimates as GLP-1 transition pressures margins. So yeah, 8% domestic sales decline. So yeah, the US sales fell by 8%, but their international grew by 1,000%. But that was mainly because of their eucalyptus acquisition. So yeah, if you read the top here, U.S. revenue declined 8%, but the second line is international revenue surged 969%. Driven by recent acquisitions supporting the top line. So the revenue is growing nicely, but it's a profit issue here on Novo Nordisk. So actually, revenue didn't grow that much despite the acquisition. And hey, Happy, thanks so much for the paper crane and all those gifts you sent. I appreciate you. If you have a stock you want to look at, Happy, let me know. But yeah, the revenue grew only 3.77. So the revenue did grow, but the profits were negative this quarter. They lost 92 mil, and that was real, like the real operating profit. They lost 80 million. So that was just a bad margin decline. Gross margins are down 11%. Net margins actually went negative. So that's why this quarter was such a big deal. They missed on revenue, missed on net income despite the acquisitions. But yeah, Amazon's kind of like a big competitor. Anything you can get on Hims and Hers website to ship to you and pay for their subscription, you can also get on Amazon, because Amazon now sells every single weight loss prescription. And that was the real growth driver of Hims, the weight loss prescriptions they were selling. Now you can get it on Amazon and Walmart delivery and all this other stuff. Used to be one of the places to go to get the cheapest weight loss prescription. Now it's not anymore after recent lawsuits. So yeah, definitely you want to be diversified, Asheville. I totally agree. Hey, Asheville, North Carolina. Hey, I was just over there. So anyway, here's Adobe. This is one of the software stocks hitting or getting hurt the most by AI. They're saying, in 10 years from now, will we need Photoshop? Will we need After Effects? Because Google Gemini and ChatGPT can just generate a logo, can just generate your thumbnail for you, whatever. So that's the only bad part. It's the sentiment around Adobe, because they're not missing their numbers. Actually, every quarter they're beating on net income, beating on revenue. It's just the future sentiment around Adobe in 10 years from now. Like, will they have negative subscriber growth? Adobe launches AI productivity agents. So yeah, basically OpenAI and Google, they have something called Stitch. It's like a direct copy of Adobe, and it costs less. So maybe they'll just have less pricing power in the future. But for right now, this company still prints money. I mean, they still make 1.9 billion of net income a quarter. What do they do with 1.9 billion net income a quarter? Adobe's mainly returning that to you by share buybacks. At the top, they're doing 2 to 3 billion of share buybacks every single quarter. So here's what share buybacks do, by the way. This is so cool in my opinion. So if we go to the net income, as you can see, the growth rate on the bottom, net income grew by 4.3, but the net income per share grew by 11. How is the EPS, or the net income per share, growing faster than the net income? Well, it's the per share part of the ratio. Since they bought back 7% of all their shares, the EPS grows 7% more, giving you 7% more ownership in the company. So I honestly kind of wish Adobe would, instead of spending $10 billion this past year on buybacks, if they did an acquisition or something. I've heard they were going to buy Midjourney, if anyone's heard of them before. So Celsius, and then we'll do, AMD. So do you think Taiwan Semi, AMD, or Nvidia, which one is the best deal today? Call me crazy, but I'm actually going to say Nvidia might be the best deal in terms of evaluation. Actually, no, Taiwan Semi would be. But let me just give you a quick pitch on Nvidia, why they are still going to go higher, even though they're at an all-time high today. If you've ever bought Nvidia, you're up on your money. They're at an all-time high as we speak. Here's the crazy part. Even though Nvidia right now is at an all-time high, if you look on the right, Nvidia only trades at 27 forward PE, which means they only trade at 27 times next year's net income. Here are the net income projections, 42 billion net income next quarter, and then 46 billion the quarter after. That's going to be that's well over, like close to 200 billion in net income a year. So yeah, they really only do trade at 27 times next year's net income. Huge GPU market share. They're like the picks and shovels play of AI. Nvidia, any news? Nvidia agrees to invest up to 2.1 billion into Iris Energy. Nvidia and Corning form a partnership. I had a funny meme. Hold on. Does anyone know Jensen Huang? Does anyone know the actual CEO? I don't. I'm going to accidentally show something I don't want to show here. But anyway, look. Anyway, Jensen deciding what to wear. That's all he wears. Anyway, let me fix that. There we go. Okay. Back to Nvidia right here. Nvidia commits 40 billion, including a 30 billion stake into OpenAI. So Nvidia literally owns some OpenAI stock. Nvidia owns so much. If we go to the Nvidia portfolio right here, Nvidia has so many investments. Like they own Intel, they own CoreWeave, Synopsys, Nokia, Nebius. So, hey, shout out Louise. Shout out the member Louise. I hope you're having a good day. Adobe 25 billion stock buyback program designed to run through April 2030. That's like so much of the shares of the company. Yeah, 25% of the whole market cap. That's insane. It's smart for them to do share buybacks when the valuation is this cheap. So Al Steno, sorry if I'm saying your name wrong. He says, "Can I get your opinion on Microsoft?" Yeah, dude, this is one of the best stocks out there. And hey, thanks, Happy. I appreciate you showing up. So actually, I'm gonna give you a follow. Yeah. Also, I'll never follow people, but just know I'll never follow you, DM you. I sell nothing. I have no course book, WhatsApp, nothing. I literally sell nothing. I'm just trying to give my opinion. What app is this? Oh yeah, hey, if you wanted to get this app I'm on, or this is a software, a brokerage, it's linked in my bio there. That is an affiliate link, full disclosure. If you end up depositing $100, we'll both get a free stock. But yeah, it's a brokerage called Moomoo. You can just type it into Google. But yeah, affiliate link in my bio there. So here's Microsoft. This is the number one software play, number two cloud play, and potentially one of the best AI plays. Because if you didn't know, Microsoft owns, oh, look at that. Microsoft generates $30 billion revenue from OpenAI business, exceeding $13 billion investment. They're up like over 20x on their original OpenAI investment. So if you didn't know, Microsoft owns 28% of OpenAI. And that's supposed to be one of the huge, AI companies that are sending software stocks down. So one of the reasons why Microsoft is well off its all-time high is because they are the world's number one software company. And if you look at any software stock like Adobe, Salesforce, they're all not doing well. But yeah, Microsoft's software business, think, Office, Word, PowerPoint, Excel, that does 120 billion of annual revenue for Microsoft. But that, because they own so much of OpenAI, they are hedged. So even if OpenAI does kind of come for their software business, they are hedged as an owner. And also if AI keeps getting bigger, their cloud business will continue to boom. This is the number 2 cloud company by market share. Right behind AWS. Their intelligent Azure cloud does over 100 billion of annual revenue as well. Then they own like Xbox and the PC business as well, but they're just a money printer. Next quarter, analysts project 31 bill of net income and then 34 bill of net income the quarter after. And notice they always beat slightly on net income. So I'm super excited about Microsoft. All this exposure and all this quality at only a 21 forward PE. So Microsoft, the Mag 7 behemoth, only trades at 21 times forward PE. I couldn't believe it. So that's why I decided to buy Microsoft for the first time ever, literally just weeks ago. There's my buy order on this day. I bought Microsoft for the first time ever that day. And I've just been diamond handing ever since. I'm certainly not trimming or selling. Ooh, watch out for that person in chat there. Let me get them out of here. Okay. All right. So yeah, that's Microsoft. I am biased because I own them, but I love the software business, the cloud business, the OpenAI investment. And apparently, yeah, Microsoft generates 30 billion revenue from OpenAI because if you didn't know, Microsoft also has a revenue share agreement where they don't just own a 28% stake. They get 30% of their revenue all the way until 2030. Isn't that ridiculous? Yeah. Revenue share payments it's just crazy. Yeah. Microsoft's entitlement to 20% of OpenAI's revenue through 2030 could translate to an additional 38 billion based on a recently negotiated payment cap on a 13 billion investment. Seems pretty good. So yeah. How long till you decide to take profit? It always depends. Some of these stocks are still cheap. Actually, my biggest regrets ever in the market have not been buying bad companies. It's been selling and trimming out of great stocks like Robinhood, for example. If you look on the left, or I used to own 55 more shares. I only own 5 shares left. And I would have been up, thousands more if it didn't sell. So that's actually why I made this portfolio. If you look at the top left, this is called, or I called it my buy and never sell portfolio. And it's an experiment because once I buy a stock in here, I legit never going to sell it. Like even though on Powell Industries, my second holding in here, I'm up 1,000%, but I've never trimmed or sold a single share. So that's why we have done so well in this portfolio. That's why this is crazy. Y'all won't believe this, but since January 1st, we are up 75% or 22,000. And all time, we're up 34,000 or 300%. So this one's been a real crazy experiment. But yeah, I have other portfolios where I definitely have not performed as hot this past year. This account's up 16% the past year. For context, the S&P 500 is up 27%. So I have underperformed, but hey, I'm still not going to complain about a 16% return. And I love individually stock picking, All right. Do you own any Adobe? I actually do not own any Adobe stock. So, hey, what's up, Japan? He says thoughts on GE Veranova. So, under every single data center, if you guys didn't know this, under every single data center are two backup diesel generators, and GE Veranova is the one who primarily makes those. And they are such in demand right now that y'all won't believe this, but GE Veranova has a $600 billion backlog. Look at that. Look at the second line. GE Veranova sells out of gas turbine production through 2030 with a 100 gigawatt backlog, which that to money, $700 billion. So anyway, GE Veranova, that's why the stock has gone up so much, because if the actual power grid goes out, data centers can't afford to go offline. So they have these backup generators. So yeah, Morningstar says they're reasonably valued. Its leading position in gas turbine markets and strong tailwinds from the multi-generational electrical supercycle will drive long-term value growth. It's just a tough one to buy at all-time highs. You know, a 56 forward PE, which means they trade at 56 times next year's net income. It's definitely hard to trust that. But look at this net income right here. I mean, profits are the highest ever. The backlog's the highest ever. They're sold out through 2030. I mean, when you have a backlog that long, like that's just invaluable. GE Vernova announces a 2.5 gas plus nuclear powered plant in Texas. Yeah, that's what data centers want right now. Nuclear plus gas. Love your channel. Hey, Dexter, what's up, man? Hope you're having a good day. Yo, are you talking about Dexter Morgan? I've been recently getting back into Dexter. I love that show. All right, next up we see, oh yeah, waste management. This is a boring one, but it's always the boring companies that give like pretty like good returns, like S&P 500 beating returns. Like all this company does is throw away your trash, but it's an industry that's kind of AI proof. And you get a good dividend. So even if you bought waste management right now, you get a 1.6% dividend. Oh, hey, Rob said, first time viewer, what's the software you're using? It looks cool. Yeah, hey, this is a brokerage actually where you buy and sell stocks on. So they ask for a bunch of information. But I have this brokerage linked in my bio, or you can just type it into Google, brokerage called Moomoo. Yeah, it's linked in my bio there if you'd like to use my affiliate link. Yeah, waste management, they're not even expensive. That's the crazy part. Even though close to this all-time high level, waste management only trades at a 25 forward PE, which means 25 times next year's net income. They actually just acquired this healthcare disposal business for like $8 billion. That's now accretive to their net income. So yeah, just very safe and stable net income, easily 600 to 700 million in net income a quarter. And check out who else owns this. Bill Gates, or the Bill and Melinda Gates Foundation, they own 7.2% of all the company. It's one of their best investments too. So yeah, if you want a good dividend growth blue chip, that's one of the best ones out there and usually beats out the S&P 500. Jensen in China today, possibly making some deals. Yeah, I heard Tesla or Elon Musk is too. I would never own Tesla stock or or not at this expensive valuation, but oh, hey, yeah, Dexter said thoughts on Netflix. Let's look at Netflix, then we'll look at NextEra Energy. Hey, isn't that NEE? Yeah, give me the ticker symbol and we'll check it out. So yeah, this is Netflix right here. Pretty easy business model to understand. It's a subscription model company, and Netflix just rose their prices. They just rose their prices, and I don't know about you guys, but we are not canceling our Netflix subscription. They have real pricing power where even though they raise prices, people don't pay. And if the few percent that do cancel, they make up for it in terms of the other people that pay more. So Netflix only trades on the right at 26 times next year's net income. That seems very fair. That's like an S&P 500 multiple, 26 times net income. They have literally 300 million premium subscribers. They make $11.69 per month per paying membership. So Netflix is cool. I guess there is some bad news. Oh yeah, Warner Bros. Pays Netflix $2.8 billion. So since Netflix wasn't able to acquire Warner Bros. Discovery, they had to pay Netflix $2.8 billion. And that's why their net income was artificially higher. Like it says, they made $5.28 billion, like a crazy record. They didn't actually make that. And it includes the realized gain of that $2.8 billion. But still, this was a phenomenal quarter. They print every quarter 2 to 3 billion of after-tax net income and free cash flow, rocking 52% gross margin. So I love the subscription model company, and 26 forward PE, not too shabby. Another bad news, though, that they fell on earnings, I'll just mention all the bad news, or I like to mention all the bull and bear case. They actually lost 2% streaming market share. So Netflix, it's kind of a tough look. They just rose prices, but they also just lost 2% streaming market share. So yeah. Actually lost 1% market share to YouTube TV. But I do think Netflix is pretty decent to buy now. So what was, oh yeah, NextEra Energy. This is a regulated utility. This is the huge Florida company. They own Florida Power and Light. And just they basically own the whole state of Florida for utilities. So check this out right here. Just in the state of Florida, yeah, it's 63% of the whole company. Just in the state of Florida, they collect $4 billion of revenue a quarter, or they make 18 billion a year just from Florida. So kind of crazy. So that one's up nice. NextEra Energy Resources. So this is a regulated utility. It's a nice dividend growth stock. They're actually the largest utility by market cap. There is no bigger one. If you buy them right now, you still get a good yield. You get a 2.5% dividend yield, and they actually raise their dividend slightly faster than inflation every year. The forward PE is a 23, so that's fair. 23 times forward net income. That's the same actual valuation is Constellation Energy. That makes Constellation Energy look cheap. But anyway, yeah, they're making 1 to 2 billion in net income a quarter. And since they're regulated, the cool thing about regulated utilities is, well, they're not able to raise prices without the government's approval. But if they don't make a profit, the government guarantees them a profit. I kid you not. That's one of the cool things about these regulated utilities. And that's why I'm such a big fan of just the whole utility sector, the VPU ETF. This ETF historically just gives you like 7 to 10% of your money back every year plus a dividend yield. So yeah, here's the VPU ETF. And here was the COVID crash, but even before COVID, these always just steadily give you 7% back a year. And the largest holding in the VPU ETF, because they're market cap weighted, is NextEra Energy. And it's Southern Company, and actually owns Southern Company. Here, I'll pull that up actually. That's actually my favorite regulated utility would be Southern Company. I'm up 8.4% on this company. They're at a cheaper valuation of 20 forward PE and a higher yield, a cheaper valuation and a higher yield than NextEra Energy, a 3.3% yield, 20 forward PE. So that's Southern Company. All right. What's your cost average for Microsoft? Oh yeah, that one's in here. My cost basis is $359. It's the blue line at the bottom there. So yeah. Here are all the stocks that I own in here. I got some winners and some big losers. I know UiPath was down bad pretty today. Ooh, I'm seeing some good names here. Yeah, no problem. Thoughts on Uber? Yeah, Sermon. Let's do Uber, and then let's do SoFi. Actually, I saw SoFi way long time ago, and I forgot to get to it. Let me do SoFi right now. Then we'll do Uber, and then like some of these other names. Like I see Micron, Vertiv, AbbVie, Roblox, Astera Labs. These are all great names. We're gonna be live for like another hour, so we'll definitely try and get to all these. So, and I apologize if I'm missing some of them. So here's SoFi Technologies. This is a fintech stock. They're actually acquiring some company right now. SoFi to acquire majority of British fintech primary bids assets. Oh, cool. Anyway, this is a pure growth company. And for a growth stock, you want to look at this metric right here. This is their financial services metric right here. And this is their real growthiest business. It's up 41% year over year. After it grew 101, after it grew 85, after it grew 244. After grew 264. So I am super impressed with the growth that they're having. And we can see that this is all organic. Like they didn't acquire a company to get this. The organic revenue grew 42% year over year at a crazy all-time high. That's what you want to see for a growth stock. You're going to diamond hand for the revenue just to hit a new record every quarter. And not just the revenue, but the after-tax net income. They actually are a money printer. They're making a couple $100 million net income a quarter, and analysts are forecasting the net income to hit $240 million in 2 quarters. It's never even been close to that before, so they're going to make a record net income in 2 quarters. I'm really curious to see that. How's their other lending? How'd that grow? Look at the lending business. That grew 55% year over year to a crazy record. How about their technology platform? Looks like that one slightly declined year over year. But anyway, lending and financial services, those are booming on SoFi and all that. And look at this. Here's the crazy part. This is why I can't believe. SoFi only trades. It's a growth company. So you look at a forward PE. They only trade at 21 times forward PE. I feel like they could easily go to like a 25, 26 really easily. So full disclosure, I do own SoFi, but I own them for a reason because they're really a great fintech stock. Oh yeah, remind me to get to NU stock. I love NU. So here's Uber. They're also one of my most recent purchases. So if I head down over here, these are all of my most recent purchases in order. And Uber is my second most recent purchase behind Ouster. I'm freaking shocked about Ouster. They're up 25% today. I don't even think there's any specific news. It's just like, someone at the company, an insider bought some shares. Oh well. But back to Uber right here. Uber is such a safe buy. I really genuinely think that. That's why I just bought them. I'm up 9%. So if you look at a forward multiple, Uber only trades at literally 20 times net income. That is ridiculously cheap for Uber, the quality that they have and the growth that they have. Here's a cool metric. This is their monthly active consumers. So not just monthly active users, but monthly active consumers went from 170 to 199 year over year. Incredible growth on their monthly active users. And check out the revenue. Revenue grew 14 and the profits actually hit a record. There was margin expansion. So when we just zoom out on their net income, this is the most profitable quarter they have ever had in history. And not just that, but also FCF, which is free cash flow. They print every quarter like 2 to 3 billion of free cash flow. Pretty ridiculous. And the main growthy business has actually been their delivery side, which isn't just Uber Eats, but it's also business to business delivery. That grew 35% year over year to 5 billion for the first time ever. That is extremely impressive. 35% year over year growth. Is there any other specific news? Uber to establish first India data center in partnership with Adani Group. Oh wow, there's a lot of news. Uber commits 10 billion to autonomous vehicle expansion. Yeah, I love Uber as a autonomous vehicle like robotaxi company. Uber One membership surpasses 50 million, up 50% year over year. The subscription now contributes almost half of total bookings, demonstrating significant growth. Well, that's good news. Uber partners with OpenAI to launch driver assistance tool and voice functionality. So anyway, there's just a lot of cool news, and I like the robotaxi thesis. I know there's a lot of increased competition from like Waymo and robotaxi from Tesla, but robotaxi Tesla is now actually going on to Uber and Waymo is. So thoughts on opening Rocket ETF position before the, what's the Rocket ETF? Or is it like, I know there's a bunch of rocket ETFs, like MARS, like Mars. That's kind of a funny one. The space and technology ETF right here. Yeah, there's a lot of momentum around these space companies. Yeah, because of the SpaceX IPO, like Rocket Lab, EchoStar, Planet Labs, the Google company. Global Star just got acquired by Amazon. Amazon just bought out that company, which is pretty cool. Can you look at Tomra Systems, TOM? I hope I can find that one for you. Let me just type in Tomra. So we found it. Okay, so it's TMRAY is the ADR ticker symbol. So let's see what this company does. Unfortunately, the company has not done too well. But also let's convert the currency to US dollars just to get a better idea here. Collection, food, recycling. So is it like a waste management, but in Europe or something? Resource, collection, recycling, food. Let me go to their website right here. Okay, they really want all my cookies. No. So yeah, they do food, transforming global food production, waste and metal recycling, mining, collection. Some sort of something like that. All right, let's see how they're growing. So the revenue is not growing too fast. So this is the quarterly data here. Well, it actually grew 16% year over year. So it's up 16% year over year. It's kind of growing at low single digits when you average it out, or mid single digits. In net income, they are struggling with net income. So this quarter, like the profits really declined this quarter, only 5 million of profits. They actually lost 3 million net income on that one. Historically, they like never lose net income. So maybe that was a one-time adjustment, but it wasn't because the operating profit. Yeah, I don't know. I wish I could give you better thoughts on this company. And so Europe, so USA is 23% of the revenue, then Germany, Northern Europe. Anyway, some sort of like collection food recycling company at a 17 forward PE. I know a lot of the food stocks have been struggling, so it's not, I bet you the stock is struggling just because all food stocks are. Like, look at General Mills. General Mills is at like a multi-year low. Wendy's, oh man, look at this restaurant right here. This is like a QSR. Wendy's stock is lower than they IPO'd in 1997. Same with Jack in the Box. So let's do IBM. This is a cool dividend growth software company. They are kind of, wow, actually they're a big chunk off their all-time highs. I wonder what happened. I know they're falling with all the other software companies because their main business, basically half of this company's revenue is their software revenue. And as we know, a lot of software companies have been struggling. IBM launches Red Hat AI inference. And okay, is there any other news around this company? IBM achieves quantum computing breakthrough with 210x accuracy improvement in protein simulation for prescription discovery. So I know they are big in quantum computing. I like them for the dividend as well. If you buy IBM right now, you get 3.2% of your money back just in a qualified dividend every year. So it's kind of rare to find a software stock this big of a market cap with a high yield. So yeah, over 3% dividend yield. How'd the revenue grow? The revenue grew 9.5, profits grew 25%. Yeah, they're making a couple bill in net income every quarter, so they can't afford the dividend. So anyway, I wonder why they're falling so much. The 20 forward PE is pretty cheap. I mean, it's probably close to a bottom. All right, next up, I see. Oh, user 36 said Rob. Oh, someone said Joby. Yeah, actually, I wouldn't buy Joby Aviation, sadly. This is like a, like you lease out like airplanes from them or something like that. All electric, it engages in developing an all electric vehicle takeoff and landing aircraft that intends to operate as commercial passenger aircraft. So I don't really know about these. Skip traffic. Okay, can we? Oh, I guess there's what the product is. So something like that, some sort of big like helicopter looking thing. Um, they're very far from profitability, and that's the thing that scares me. We just go to net income right here. They are burning through an insane amount of money. Gee, the losses just kind of worsen every quarter. They lost 240 mil this quarter, 200 mil last quarter, 180, 160, 160. So it's tough. I mean, they do have 25 mil of revenue, but I just don't know about the actual thesis here, like about what the company actually does. I just don't believe in it. Do you think software will make a comeback? Yeah, I actually do. A lot of software stocks are cheap, and a lot of the good software companies have made a comeback, like Microsoft, AppLovin, Uber a little bit. All right. Joby just did their first flight to New York. Oh, hey, that's cool, Burner. Yeah, I think Uber even owns some Joby Aviation. Let me actually check that. Shareholders, Toyota Motor, no. But I'm pretty sure Adobe or Uber owns some shares. I forget. But it's tough with those net income losses to trust. So next up, I see. Ooh, Monkey D. Luffy, what's up? Lately, I've been getting NU ads for their online banking coming to the USA. Really? This is a really cool company. If they're doing USA ads, that means they're most likely getting their US banking charter. So yeah, this company is applying for their US banking charter right now, because this is really this is a Brazil bank. So if we go right here to the to where the revenue comes from, literally 91% of all the revenue comes from Brazil, so that's why. And if we go to their revenue versus net income, this is ridiculous, and this is organic too. Revenue grew 56% year over year, so revenue's up 56, and the net income was 894 mil on that. If we zoom out, the net income has never even been higher before. So legit 900 mil of after-tax net income, revenue of 4.69 mil, up 56%. So one of the reasons why the multiple is so low is just because they're headquartered in Brazil. So yeah, look at that valuation, only at a 15 forward PE or 15 times next year's net income. It's really cheap for the growth that they have. This is some of the most impressive growth I've ever seen. 56% revenue growth, 62% net income growth, which means margin expansion. Yeah, 19% net margin, and the net margin grew year over year. And here are the net income projections. Yeah, 900 mil next quarter, 980 mil. Yeah, it's going to grow from 630 to 980 mil in a year. So I'm actually a big fan of NU. Literally bought some NU today. Hey, what's up, UZG? Nice, dude. Let me do AMPX, AMPX. Then we'll look at LITE and oh yeah, Robinhood. I forgot to get to Robinhood. We'll check out Robinhood as well. I have a Robinhood brokerage too. So here's Empress Technologies. I think this is like a battery company, where they sell like sale of battery products. They just have a lot of future growth projection. Like check this out, and notice how they beat on revenue every quarter, but they're projected to do 34 million of revenue in 2 quarters, up from technically 16 million. So the revenue is basically doubling year over year. Yeah, check out these growth rates at the bottom. For the past 5 quarters in a row, they're growing triple digits. So that's impressive, and they're not losing that much money. It's still not great that they are losing money, but they only lost 5 mil, 3 mil. What are analysts forecasting? Yeah, they're only going to lose 3 mil next quarter and then only lose 1.5 the quarter after. So I think this one is just momentuming because of the growth of the top line and the top line forecast. With that being said, though, is probably all priced in. It's hard to buy. Definitely hard to buy shares at current prices. Here, let's check out their website right here. Empress. Empress Robotics. What the? Okay. Maybe they sell drone batteries. Empress secures a repeat 35 million purchase order from leading UAS manufacturer. I guess here's their 100% longer running term, 80%. Dang, I wish my phone battery could have this right here. Your phone charges 80% in 6 minutes. So 80% of the battery charges in 6 minutes. Anyway, some sort of batteries that drones are buying or something like that. So let's check out LITE. What's up, Orlando? We'll check out Fast and SoFi, RVI. Yeah, Robinhood Venture Fund is way off its net asset value. I would not be buying the Robinhood Venture Fund, but let's check out Lumentum right here. This is a company Nvidia likes. Lumentum to join the NASDAQ 100, replacing CoStar Group. I think there should be like an Nvidia news. Guides Q4 revenue of $1 billion amid supply constraints. Oh, wow, that's pretty good. So let's see what the revenue forecast is next quarter. So yeah, revenue is supposed to be 984 mil and then 1.15 bill the quarter after. Look at that year-over-year jump. On the very left, the revenue is 533. It's going to go from 533 all the way to 1.15. That is pretty good. Yeah, this is organic revenue growth. No wonder this stock is at all-time highs. It's not just momentum. It's the real fundamentals improving. Check that out. Revenue's up 90%. And they're finally making, look at these year-over-year growth rates, finally making good, consistent net income. Let's see the net income forecast. Yeah, they're going to do 220 mil in net income, 288 mil in net income the quarter after. That's ridiculous. So they're going to be consistently making close to they're going to make over $1 billion of net income a year. And the company's worth $81 billion, so it is really expensive. Analysts say they're trading at 63 times next year's net income. So that's the one bad news. But they're expensive for a reason, because they're having this monster growth. So yeah, LITE, Vertiv, Comfort Systems, a lot of these stocks are at all-time highs, like these electrical infrastructure names that data centers are just using like crazy. Can you check out? Yeah, the PE is concerning a little bit. What's up, Skagnet, bro? Thanks for the roses there. I appreciate ya. If you have a stock you may look at, let me know. Okay, well, let me do Fast, and then we'll do Vertiv and Google. Hey, I haven't looked at Google today, and Nike. We'll check out all these. And Robinhood. Oh my goodness, I'm so behind. So here's Fastenal. Actually, this company has done pretty good. I think they just sell fasteners. Like, I think that's all they do. Yeah, fasteners, safety supplies, legit janitorial supplies, tools, hydraulics, so cutting tools, kind of a nice little diversified company here of what they sell. How's the profits? I'm assuming some of this stuff is in a lot of demand from AI and whatever, and check out the after-tax net income every quarter. They're consistently making 300 plus million of net income a quarter. Fortress balance sheet, no net debt, making 300 mil in net income a quarter, and over 300 mil of free cash flow a quarter. So, wow, congrats if you own this company. It's done pretty good. And they're a little expensive, though, at a 35 forward PE. But, I mean, they have a heck of a business model. All right, next up, let me do Robinhood. I forgot to get to that one. Then we'll do Vertiv and CING. Yeah, CING, Skagnet, remind me. We'll do that one. So Robinhood, that's actually this app right here, publicly traded. So I do have a brokerage with Robinhood. I have a Roth IRA with Robinhood. And right now, one of the reasons why the stock is rallying so much is because of this prediction market stuff, which I never recommend doing because it's pure speculation. But whenever you do a prediction market contract on this brokerage, they keep a 2% margin fee. Whenever you buy and sell a stock, they only get a 0.1% fee. So these prediction markets are 20x more valuable for their bottom line, and they are pushing them right now. So Robinhood stock is down, though, because of their crypto volumes kind of down. Here, we can actually get the data here. Crypto volumes, look at that year over year, went from 28 bill to 17 billion. So the crypto revenue is down. But I love their event contracts. They make money every time you do an option trade, an event contract, buy and sell a stock, the Robinhood Gold feature. So yeah, basically they just have incredible net margins, and this is real. They have 30 to 40% net margins. So if you spend $100 with them, they keep $30 to $40 after tax. Who knows what this app is? Yeah, hey, this is a brokerage I'm on. So yeah, we have the Robinhood brokerage, and then there's this brokerage I'm on right here. If you'd like to get this app I'm on, it's linked in my bio. Brokerage called Moomoo. But yeah, they ask for a bunch of information and stuff because it's a brokerage where you buy and sell stocks on. But yeah, I love Robinhood. They make a couple $100 million net income a quarter. And if you like Robinhood stock, which is this app right here, Robinhood is publicly traded hood. This app I'm on right here, this brokerage I'm on right now is also publicly traded, and I just bought $500 more of this stock right here. This is Moomoo. If you look in the very top left, this stock is called Moomoo, and this brokerage I'm on is called Moomoo. So this brokerage I'm on right now, it's them publicly traded. Here's what's so incredible. And again, if you don't want to get this app I'm on, linked in bio. But revenue grew 44% to 827 mil, and on this 827 mil, they kept after tax 433 million. So here's another brokerage with a 50% net margin, better net margin than Robinhood, and it grows faster. Robinhood only grew 15% sales. This company grew 45% year over year. Check that out. Revenues at a record this quarter, and net income. Margins are expanding at this company, and that's real after tax. You know, before tax, they made 532. After tax was 433. So that's real. Really impressive. They get a lot of commissions, interest income right here. That grew 56% year over year. Oh yeah, another cool feature about this app. They give you literally for free a 3.35% APY on your idle cash. Robinhood and Webull, they make you pay $5 a month to get this. On this app, there is no subscription. It's completely free. All features are free. They give you a 3.35% APY. They earn like a 3.8% APY and just pocket the difference. So kind of a smart business model. Anyway, let's keep going here. CING. Let's do CING. Then we can do Google and Vertiv and PSIX. Yeah, that one's up a good chunk today. So here's Singulate. I'd be super careful with this one. Again, thanks for the roses there, Scagnant. I appreciate you. If you look in the top right, they're only worth 59 million. So it's just kind of hard to trust a lot of your hard-earned money in such a small company that's at an all-time low, only worth 59 million. But let's see what they actually do. So they're a revenue-less startup. So we go to revenue right here. It says there is no data. Go to revenue, it says no data because they've never sold anything, never sold a product or a service. Oh, and actually, Scagnant just said FDA approval this month, or what does that mean? Did they get FDA approval, or did they like rally up and then they fell back down? Anyway, they're worth $59 million. And here's the bad news. They lose $6 million a quarter. And $6 million may not seem like a lot, but when you lose $6 million and your whole company is worth $59 million, that's over 10. Well, it's like 6% of the company. Actually, no, that's 12% of the company, or like 10. So they lost 10% of the company, another 10%, 8%, 8%. So they've just lost like 30% of the whole company in net income just in 1 year. So there's real bankruptcy risk here, and they really need to sell something soon. That's the thing. Yeah, they need to get FDA approval and start selling stuff like crazy. So yeah, that's Sing. I would not actually own them, or with nothing meaningful. Oh, what did I want to look at next there? Let's do Vertiv VRT. I think it's VRT. Vertiv right here. This is your data center cooling company. And I saw Vistra Energy as well. There's VST, but then there's Vertiv right here. This is your data center cooling company. They sell the cooling pumps to data centers, and they just have incredible sales momentum. I mean, if we go to their products revenue, that grew 29% year over year. After grew 30, after grew 7, so nice little growth there. Services revenue, that grew 31, after grew 5, after grew 9, so that's the highest growth rate on the screen. And basically you just want to look at the future analyst here. The forecast is they're going to make 630 million of net income in 2 quarters. If we zoom out, it's never even been close to 620 mil in net income before. So there is incredible EPS growth that is still going to happen to this company right here. So that's why you really don't value them off current net income. You value them off next year's net income. And they're still a little expensive because they trade at 93 times net income, but only 60-40 PE. But that 60-40 PE is still too expensive. Morningstar says they're overvalued. While the structural migration of enterprise data to cloud and increasing rack density will drive long-term value growth, the extreme volatility of AI-related infrastructure spending and high customer concentration risk require caution. So, yeah. Anyway, that's bad news. But I mean, all these stocks are at all-time highs right now. Like, I love that whole industry. Actually, I have them in my electrical infrastructure watch list. These are all the best names here. Or actually, no, I have them in my HVAC watch list. You know, Vertiv, Comfort Systems, Train Technology, AAON, MCore, Amphenol, Madison Air. These are all really great HVAC companies that do the heating, ventilation, and air conditioning for these data centers, because these servers will literally burn themselves down if they're not cooled properly. So it's really important. Well, I saw Iris Energy a few times. Let's do Iris Energy, then we'll do Google. Why do you have so many different apps? Yeah, these are all brokerages right here. These are all apps where you buy stocks on, they all ask for information and send you a tax form, but there's no actual burden of having multiple brokerages. Like it's literally just an extra filled out sheet of paper you mail. Like there's no burden of having multiple brokerages. So yeah, if you already have a brokerage, there's no burden of having another one. And if you want to get this brokerage I'm on right now, this app I'm on, it's linked in my bio, my profile there. So here's Iris Energy. Nvidia just took a stake into this stock right here, believe it or not. So where is this? The third line. Iris announced a strategic partnership with Nvidia. So 3.5 billion. So what does this company do? Iris Energy is a big customer of Nvidia. If you're wondering what does this company do, it's nothing proprietary. That's the one part that is tough about Iris Energy. All they literally do is own a bunch of graphics cards in a data center. So nothing proprietary, nothing special, just literally GPUs in a data center. And what are those GPUs doing? Well, right now, they're being used to mine Bitcoin. 76% of all this company's revenue still is Bitcoin mining, or of the most recent quarter. And then right now, here's what they're doing that's leading to the growth. Instead of just mining Bitcoin with their GPUs, they're renting them out to cloud companies. But it's not a profitable company, and that's what scares me. I mean, the losses are going to worsen. They're going to lose 102 mil next quarter, 159 mil in net income the quarter after. The losses will only worsen over time. So they have good revenue growth, which they did miss on revenue this quarter. Analysts expected 219. They only did 144, but it's supposed to hit 331. It's just these net income losses are the scary part. So the way I normally value a company is to do like a multiple year out or like a forward PE, but there is no forward PE because they're supposed to lose more and more net income. So that's the scary part, but I think there is this one's just kind of been propped up by Nvidia in their investment. Nvidia, they're trying to prop up all those same companies. If you didn't know, Iris Energy does the exact same thing CoreWeave does. That does the exact same thing Nebius does. All these are GPU companies. They just literally lease and rent out graphics cards to cloud companies. And it's so highly competitive and commoditized that there's no margin. They don't make money. None of them do. Any of them. Look at any of them. Nebius, Iris Energy, CoreWeave, all of them are miles and miles from making any sort of net income. And that's why I can't buy them. Celsius. Yeah, I forgot. Oh, actually, no, I got to get to Google. Then we'll get to Celsius and some of these other ones like, PSIX, NOMD. What's up, Silver? Good to see you. Applied Materials. That's a cool one. So here's Google right here, a phenomenal buy and never sell company. I do own Google in my Robinhood portfolio. They're actually my largest holding in here. So yeah, check this out. Literally just from 1 year ago, Google's up 149. And we're up 145. It's not like we bought the dip on them. I technically bought them when they were at an all-time high. They have just done super well in just this past year because of how good their AI and in their investments are doing. So let's see if there's any specific news right here. Anthropic commits $200 billion to Google Cloud services over 5 years. That is why I'm so bullish on the Google Cloud. Google is an advertising play, social media play, a cloud play, a space play. If you didn't know, they own a bunch of SpaceX. That's why right now in the second line, Google is in talks with SpaceX for rocket launch deal to support orbital data center. That's because they're such a huge shareholder of SpaceX, and it's actually one of their best investments ever. Google is up over 100x on their SpaceX investment. They're also up over 100x on their YouTube investment and over 100x on their DoubleClick investment. They literally have the best track record of investments in all of history. It's pretty impressive. But anyway, let's see. Is there any specific news? Anyway, let's go see. So even though Google is at a crazy all-time high right now, or pretty close to it, they're not super expensive. I mean, they only trade at 31 times next year's net income. So 31 forward PE. And we really got to look at operating profit. They're the most profitable they've ever been this quarter. 39 bill of profits. If you look at net income, they had a slight one-time adjustment. This is the after-tax net income. It says after tax, they made 62 bill. When before tax, they made 39 billion. They had a realized gain on their SpaceX investment. That's why their net income was artificially higher like that. But we're still, even though when we exclude that number, the most profitable quarter ever for Google. Wow, that's margin expansion. So revenue grew 21, profits grew 29. So incredible. I mean, the Google Cloud business, which has also a huge backlog, that grew 63% year over year. And Anthropic just committed $200 billion to their backlog. It's ridiculous. So next up, what was that? Oh yeah, Celsius. This is a cool energy drink company. So if you've heard of Alani, you heard of Celsius, you've heard of Rockstar Beverage. This company owns all of them. All those brands. Let's see if there's any specific news. North America revenue increased 144%, fueled by acquisitions. International revenue grew 55%. So nice. When we combine all the revenue The revenue grew 137% year over year. So also one of the reasons why the revenue, grew this much is because of their acquisition of Alani. So check this out. If we go to their cash investing activities, they bought Alani this quarter for $1.3 billion. Alani still owns shares, 8.8% of all the company, but they own the brand now. They just still own it via the shares here. That's what made the revenue spike up this quarter, was because of that acquisition. But yeah, revenue's up 137, and this actually, they made 110 million net income. And technically, this company trades at a really cheap forward multiple. Celsius trades at only 17 times next year's net income, which is actually really cheap. Morningstar says they're undervalued. Strategic acquisitions of Alani and Rockstar combined with the PepsiCo distribution partnership will drive long-term value growth in the fast-growing, ready-to-drink energy market. Yeah, so Celsius is struggling right now. The weird part is Monster is doing amazing, MNST. Monster Beverage, check that out. Monster Beverage is pretty much at an all-time high right now. So maybe Celsius will follow soon. So NOMD, sorry if I'm a little, but I am definitely behind here. We'll look at eTour. What's up, Orlando and Keith? We'll look at ABT after this. So here's Nomad Foods. Yeah, a lot of food companies are at an all-time low. That's another reason why. If you look at Celsius, Celsius is struggling probably because of every food stock is. If you look at like General Mills is at like this multi-year low. Wendy's is at a multi-year low. Hey, we'll look at some of these other stocks like Vistra Energy versus Constellation Energy. That's a good one. What app is this? Yeah, hey, this app I'm on is called Moomoo, Chris. I also have it linked in my bio, or this is a brokerage. So yeah, if you want to get this app, link in bio. So here's Nomad Foods. They're worth $1.26 billion. They're a European company, so let's convert the currency to US dollars. Looks like they sell frozen foods, is what it looks like they sell. How about the net income? So yeah, the net income has fallen year over year. If you average it out, they still make like 40 mil a quarter, but they did have that one negative quarter. Let's go to their website, see if we can find out what they sell exactly. So it looks like they sell frozen peas. Here are their brands. So Bird's Eye. These are European brands, so I've not ever heard of these. Thought they said Belvita, but no, they got Belviva. Anyway, pretty cool. Some sort of food company. I'd rather buy a higher quality US name, maybe like a Mondelez. If you like them, you'll probably really like a Mondelez. They own Oreo, Toblerone, Chips Ahoy, some of the best brands out there. They actually own Belvita. Yeah, there are some of the brands at the top like Ritz, Cliff Bar. I wonder if we can find like all their brands. So yeah, Cadbury, Philadelphia cream cheese. Pretty cool brands here. Probably a safer portfolio. I don't know. Now it's also a European company. Mondelez is also a EU company. So Vistra Energy versus Constellation Energy, good question. So CEG, or I'll pull that up. If I head over here to my Robinhood portfolio, I own a company called CEG. This is the largest US nuclear company. They own 33% of all the US's nuclear reactors. They're the first place. Second place would have to be Vistra Energy. They own like 6 nuclear reactors, not like Constellation's 35, but this one's still pretty good. They're also acquiring a natural gas portfolio because data centers right now want the combination of nuclear and natural gas. And the valuations are really cheap. Vistra Energy is trading at 16 forward PE. Constellation Energy is at like a 23 forward PE. So these stocks are really cheap. Yeah, look at the forecast. They're going to make 700 mil next quarter, 580 mil the quarter after. So they make good money. 17 forward PE, yeah, you can't go wrong. ABT stock. Let me do ABT. Oh, Palantir. Hey, remind me to get to Palantir there, Jack. I love Palantir. Oh, and BWXT as well. There's 2 Jacks. Yeah, BWXT is a phenomenal company. So here's Abbott Laboratory. This is like a diagnostic medical device company, and they have not done too well. Unfortunately, the stock is the same price as they were back in 2019. So you bought them in 2019, 7 years ago. It's the same price that it is today. And I think it's because the net income really hasn't escaped that same level. Actually, it'd probably be better if I pull up the operating profit to give you a better idea here. So yeah, look at the profits here. If we go back to 2021, they were actually making more money in 2021 than they are currently. So growth has just been slow. Yeah, actually revenue grew kind of decent. Oh, so yeah, if we zoom out, revenue was higher in 2021. So that's why they really can't escape this market cap and valuation level because they haven't grown their profits since then. But did they do an acquisition? Whoa, hold on. Look at this though. They just acquired a company for $20 billion. Hold on, that's got to be game changing. So that's why the assets grew from 86 to 110 bill of assets quarter over quarter from this $20 billion acquisition. The weird part is, even though with this acquisition, the revenue only grew 7.7%. So I would want to dig more into that acquisition. Let's see, is there AI earnings? So medical device sales increased 13%, led by diabetes care and a 14% growth in glucose monitor sales. Diagnostic segment, though, faced heavy headwinds from a weaker respiratory season, negatively impacting sales. Nutrition segment experienced a decline, while established pharmaceuticals contributed to an overall growth alongside medical devices. There you go, some sort of medical device testing company. What app is this? Yeah, hey, Caden, this app is linked in my bio. Brokerage called Moomoo. So Burner said Solstice. Here's what's so cool about Solstice. This is a uranium company. So there's uranium companies that go and take the uranium out of the ground. Well, check out the third line here. Or it's at the very top now. Solstice right here, this stock owns the only uranium conversion operation in the US, which will see higher sales from growing nuclear power generation in the coming years. So basically nuclear, once it's mined from the ground, it has to be refined, turned into that yellow cake uranium to be used as fuel for nuclear reactors. And Solstice owns the only one in the US. So they're expensive though at a 33 forward PE, so it's tough to buy now at an all-time high. But I can see why they're at an all-time high. Pretty cool. Yeah, app's called Moomoo. Yep, linked in bio. Hey, Nathan, happy hump day. What's up, Sharkwater? Thoughts on Celsius 5 months ago? Oh, hey, Sharkwater, all you have to do is rewind by literally just 2 or 3 minutes. We just deep dive into Celsius. I think they're really cheap at a 17 forward PE. I don't think it'll get much cheaper than a 17 forward PE. I think one of the reasons Celsius is falling is just because all of food stocks are falling, like a General Mills. I think it's just following the negative sentiment around the sector, but that wouldn't scare me. I definitely wouldn't get scared out of Celsius. Oh yeah, Palantir. So let's do Palantir. And hey, what's up, Lopez? We'll look at SanDisk after this, or DRAM. We'll check it out after this. And Marvel. I see some good names here. So here's Palantir. This is one probably people have heard of. They're down 5% on the day. Ukraine Zelensky meets Palantir CEO Karp to discuss extended defense technology cooperation. Raises full year guidance. UK to grant Palantir contractors unlimited access to patient data. Okay, anyway, let's go look at their actual numbers because a lot of the company's revenue comes from the government. A lot of the military, the Air Force, a lot of police stations all use and pay for Palantir software. That grew organically 76% year over year. That's incredible. It grew 76, after grew 45, after grew 16. So that's the crazy part. The growth rate is growing, and not just on the government side, but also the commercial side, which grew the most. That grew 95%. That is incredible. I'm from Singapore, and I have visited their booth, asking me to sign up. Oh, hey, that's awesome. Isn't it challenging to invest? No, not at all, Eveline. Not for me. Yeah, hey, again, if you want to get this app I'm on, people keep asking, it's linked in my bio. It's a brokerage called Moomoo. I also have some tutorials on my YouTube channel on how to use the brokerage and my favorite tools and stuff, how to analyze stocks. But yeah, brokerage called Moomoo, linked in my bio if you want to use my affiliate link. But yeah, commercial revenue is up 95% year over year. I couldn't believe it. And check out what the analysts expected. Analysts expected them to report 616 million net income, and they did 870. So no wonder the stock is at such a high valuation. They crush on earnings every quarter. They're expanding their net margin. Look at that. They have a 53% net margin, which means if you go spend $100 with them, they keep $53 after tax, which is a huge improvement from their 25% from the previous year. So revenue organically grew 85. Net income grew by 302% because of the margin expansion. They have no debt. That's another huge, takes a lot of risk off the table. They're debt free. They have no debt. So pretty cool. All right. Hey, thanks again, Burner Mail, for all the gifts there. All right. He says Nike. I wasn't going to cover this one because I don't have anything good to say, but we'll cover Nike. I actually completely sold out of Nike a while back. So I'll just show you the numbers for yourself and you can draw your own conclusion. I just can't buy into the growth story. So I actually sold all my Nike at $78 a share. And the unfortunate thing is, even though Nike is at this new multi-year low level, even though Nike is the same price as they were back in the year 2014, so the stock's been flat for a really long time, I mean, they're still kind of pricey at a 26 forward PE. That's actually more expensive than Microsoft, more expensive than Meta. even at an all-time low, which is unfortunate, and the growth is kind of gone. So if you go to revenue, look at these year-over-year growth rates. It grew 0.09, which doesn't beat inflation. Last quarter, it grew 0.5, 1%, -11, -9. So they're kind of not growing faster than inflation. So slow revenue growth. But look at this is the worst news. The revenue grew 0.09, but the net income fell by 35. What does that mean? That means margins are falling. This is the saddest part. Net margins declined by 35% year over year. So look, they used to have a respectable, 9, 10% net margin. Now the net margin, as of this quarter, is only a 4.6. And it also is tough for their dividend. That's the other crazy thing, the dividend. Oh, and look at next quarter's forecast. They're only supposed to do $170 million in net income next quarter. Here's the tough part that I got to mention as well. They pay a dividend. That dividend costs them every quarter $609 million. So no matter what, they have to pay out $609 million of their net income just to their dividend. So technically, yeah, they made $520 million net income, but they technically lost over $80 million in net income because they had to pay out $609 million in dividends. So they actually lost money this quarter despite making $520 million net income. So I actually think they might even have to cut their dividend. So that's the bad part about Nike. I know probably the worst is all priced in, but I'm just be real careful. Nice. I will definitely be seeing you on YouTube. Hey, thanks. That's the best way to support me. Just watch the stream from YouTube. I'm trying to build up my YouTube stream. Look at what my stream's already cooked. I don't even know if on TikTok it even shows this what I'm showing, but your live contains themes that some may find uncomfortable. Body exposure and that behavior. I don't know how my stream is doing that, but oh well. We're already kicked off the For You page, so if you want to support me, the best way to is follow my YouTube, or just follow the TikTok. Follow the TikTok. I try and stream every day. I sell literally nothing. I have no course book, WhatsApp, Telegram. I don't coach. I literally sell nothing. I'm just under give my opinion. Can I start with $5? Yeah, absolutely. For the longest time, actually, this account right here, for the longest time, actually, check this out. For the first couple months, I had only like $150 from May to August to September. This account was worth $260 for like 6 months when I first had my account. So the goal isn't to get rich quick. It's just slowly just add in more money every time you get some. So next up, oh yeah, DRAM. So Roundhill Memory ETF. Yeah, so if you don't know which memory stock to buy, like if you're like, I know there's Micron, I know there's SanDisk and Western Digital, Seagate, all that. If you don't know which one to buy, or Samsung, SK, this ETF just diversifies you into all of the top memory stocks. So yeah, it's just a pure memory sector ETF right there. Pretty cool. All right. Next up, Hooper Dream says IAUX. What is that one? I-80 Gold. Huh. So I'm assuming they kind of just follow with whatever gold does. So Granite Creek, Lone Tree. So these are the names of mines. So they own some gold mines. So do they actually make money though? They do. Okay, so they did 52 mil of revenue for Q1. And on that, they actually lost though 78 million. So that is weird. They're losing a lot of money. That's probably why they're underperforming a lot of the other gold companies. Yeah, this one has underperformed actual gold. If we look at the actual price of gold commodity is IAU. Look at them the past since 2019. Here's 2019, it's 25. Now it's 97. If we go to this stock right here, it hasn't followed that similar trend since 20. Actually, it's lower than they were in 2019 and 2022. So yeah, I don't know about that one. I don't like the net income losses there. What is G13? G13. Is it this company right here? Some Singapore company? I don't know. Is there any like specific news here? Announces investment plans for new concept hotel. I don't know. Higher airfares, pressure on operations. I don't know what this company is, but it's a Chinese company. So we'll convert the currency to US dollars to try and get a better idea here. So leisure and hospitality. Yeah, I'm assuming this is a hotel, kind of like a Chinese hotel real estate company, something like that. 6.5% dividend. There you go. What platform is this? Yeah, hey, Bear. Yeah, this platform I'm on is linked in my bio. Broker called Moomoo. Yeah, they ask for a bunch of information. It's where you buy stocks on. So whenever you buy and sell stocks, you got to pay taxes. So yeah, linked in bio though for my affiliate link. If you end up depositing $100, we'll both get like a free stock. Okay, next up I see. You've been dealing with TikTok issues since you started. Yeah, Sermon, I know. It's unfortunate. Ondas's earnings are tonight. Oh, yeah. So basically, if you buy the stock now, it's like betting into earnings. On earnings, they either go up or down a bunch. Ondas subsidiary, Roton Aerospace, successfully demonstrates Skydance long. Okay. Um, Anyway, let's see what the earnings expectations are. I guess I can check that out for you. So revenue's forecasted to be 39 mil. Actually, check out how it's just going to change so dramatically year over year. For like a year ago, this company was doing like a couple mil a quarter, like 4 mil of revenue a quarter in 2025. Now, in 2 quarters, they're expecting 63 million of revenue in 2 quarters. That's insane, the future revenue growth that's expected to happen. They are still supposed to lose net income though, like 30 mil next quarter and 30 mil the quarter after, but as long as they keep growing the top line, I think the momentum will probably continue. So Corning, yeah, that's a cool one. This is another like AI infrastructure company that they're so important that Nvidia took a stake into them. So wait, where is that? Yeah, the third line. Corning and Nvidia formed strategic partnership with a $3.2 billion investment. Bank of America adds Corning to top tier US 1 buy list following the Nvidia partnership. Oh, cool. Anyway, Corning right here, they don't just have a big partnership with Nvidia, they also have a big partnership with Apple. If you didn't know, Corning also makes Gorilla Glass. So if you've every recent modern sold iPhone nowadays uses Gorilla Glass, so that's 35% of the revenue. And then the main growth business has been their optical communications, this data center fiber optics business. Yeah, check out the future profits growth. I mean, net income is going to hit 712 million in 2 quarters. If we zoom out, it hasn't even been close to that before, 580 million, but 712 mil, it's going to be a crazy record. Look at the revenue. Just revenue is going to go to 5 billion. They're going to keep 712 mil in net income on that, which is like a 12% net margin. So yeah, they're definitely overvalued. They're definitely too expensive to buy. I would not buy them at current prices at a 62 forward PE. That's definitely a tough one to buy, but they deserve it following that Nvidia investment. What do you think about Klarna? Yeah, what's up, John? So Klarna, oh, hey, yeah, we'll do Marvel. Yeah, try not to spam there. We'll do Marvel in a couple stocks. I got you. I want to do Klarna, AMPX, and then Fortinet, and then we'll check it out. And thanks again, Junior, for all those gifts there. I appreciate you. If you have a stock you may look at, let me know. What is your most recent buy? It's actually, I think it's Microsoft. So here, or no, McDonald's. McDonald's is technically my most recent purchase. It's a steal of a deal, I think. So here's Klarna. This is a buy now, pay later stock. So how'd the revenue grow? Again, they just IPO'd, so we only get 2 quarters of revenue comparison data. So yeah, since they've been public, they've only reported earnings once. So there's not really too much data I can look at here. This is all we get. But the revenue grew 20%. They are still losing net income, and analysts are forecasting them to lose 65 mil next quarter, 30 million the quarter after. So that might be why the stock is struggling. If you do like buy now, pay later stocks, though, I think you'll also really like Affirm. This does the exact same thing. They have a bunch of partnerships with Amazon, eBay. And this buy now, pay later stock, this one finally is net income positive. They just got net income positive. They used to lose money just like them, a couple hundred mil a quarter. But now Affirm makes a couple hundred mil a quarter. And the revenue grew 33 after 36. So phenomenal growth on this one. Hey, no way, dude. OS for the sticker, the gifts there, man. I appreciate you, my friend. Hope you're having a great day, OS604. He said Marvel. Yeah, let's do it. MRVL. They are making custom chips. I think Google even uses Marvel. So any specific news? I'm not seeing any specific news here, but let's do an earnings recap of this company. Anyway, well, let's just look at this right here. One thing to note that the revenue hit a record this quarter, 22%. It hit a record despite selling out of one of their low margin businesses. Last quarter, they sold off one of their low margin businesses for $2.4 billion. So they received $2.4 billion in profits. That's why last quarter it says they made $1.9 billion in net income. They didn't actually make that $1.9 billion. That was from the one-time adjustment. But even excluding the one-time adjustment, this is the most profitable quarter they have ever had. If we zoom out, like it was a tough buy a year ago. Look, they were losing money every quarter, a couple hundred mil. Now they're making a couple hundred mil a quarter. And at this growth rate, what are the net income going to be this same time next year? And here's the projections. It's going to go from 194 mil in net income to 390 mil. So it's nearly going to double. Basically, they're going to have 100% EPS growth. So that's why you value them off a forward multiple. Oh, but it's still tough. It's still expensive. That's the one part. Even though Yeah, they're at an all-time high. They're too expensive to buy. But also, I don't know if I'd sell out of this company. But yeah, I definitely would not fully sell out of my position. I can see why they're at an all-time high. They really do have improving fundamentals. But yeah, it's definitely one that's too expensive to buy right now. Yeah, if you have another stock you may look at, let me know, OS. So let's do AMP. Wait, I think we already did AMPX earlier. Yeah, we already covered this one, so I'll kind of be really quick about this one. Then we'll do AMAT and Netflix and Fortinet. Yeah, we got to get to Fortinet too. But yeah, AMPX, they sell a bunch of batteries, and their batteries are like 100% better, or I'll show you their actual statistics that they so yeah, their batteries have 100% longer running time. And look at this third line, 80% charge time in 6 minutes. You know, I need that for my phone because my but so yeah, they sell a bunch of batteries right now, and there's just a lot of growth happening. If we just go to revenue, look at the year-over-year growth rates on the bottom. Revenue's up triple digits for the past 5 quarters in a row, and it's going to continue at this 100% growth rate. Revenue's going to hit 34 million next or in 2 quarters from now, so it's still too expensive to buy right now though. Like I feel like that it's all priced in, but they don't really lose any money. So AMAT, so Applied Materials, this one, congratulations if you own this one, it's at a new all-time high. It's another semiconductor kind of infrastructure company right here. Taiwan Semiconductor joins Applied Materials EPIC Center to develop advanced 3D semiconductor technology. Oh, cool. Multiple analysts raised price targets to $550 on AI chip demand outlook. Wow, the stock is 500 or it's 440. They're projecting 550 stock price. So let's see. Yeah, a little bit of an expensive multiple, a 35 forward PE. Yeah, they do semiconductor systems, obviously definitely in demand from data centers right now. Check out how they beat on net income. Analysts expected 1.7 bill. They did 2.02 bill in net income this quarter. It's actually really impressive. Yeah, they're making like 2 bill in net income a quarter. I know Taiwan and China are big. Yeah, so do notice it's like an international semiconductor play. China's 30%. It's the largest country. Taiwan's another 25%, Korea's 20%, and these are all other countries that are trying to get ahead in AI. And then the US is only 10% of the sales. But yeah, it's a more international kind of semiconductor play there. So let's do Fortinet. Someone said, what app are you on? Yeah, hey, Juice. This app I'm on, it's linked in my bio. It's actually a brokerage where you buy stocks on. Yeah, broker linked in bio. What was it? FTNT. This is a phenomenal cybersecurity. Oh, they're at a crazy all-time high today. I'm so glad I've been promoting this one and a lot of other cybersecurity companies. I've been such a bull on cybersecurity specifically. Fortinet partners with Nvidia. Wow. To integrate for AI gate solutions. That's really cool. So yeah, out of all the software sectors, I think cybersecurity is one that's going to get hurt the least. Like I can see how it might hurt Adobe and Duolingo, but not Fortinet, not this cybersecurity subscription behemoth. Look at their security subscription. I love subscription model companies. It's all reoccurring and predictable. That hits a record every year. That's what you want to see if you're going to diamond hand a growth company with no dividend. Just crazy good revenue growth. Oh, and not just revenue growth, because revenue's at a record, but also net income. Look at the trend of this net income over time. I mean, they're the most profitable they have ever been, making over 500 million of after-tax net income a quarter. You know, before tax was 580, after tax is 530. So I'm just really impressed with Fortinet. They're just too expensive. Oh, look at how they crushed expectations. Analysts expected 387. They did 540. And that was a real beat on EBITDA too. No wonder this stock is at an all-time high. It's not just momentum, it's the real fundamentals actually beating expectations. I've invested in such a long time. Oh, hey, nice, dude. You know, the longer you're in the market, the more likely it is to make money. You know, time in the market beats timing the market. So here's Alibaba. This is like a Chinese Amazon. You know, the original story was the Chinese guy who founded this like studied Amazon, and he's like, hey, that could work here in China. But this is more of a B2B company, which means Amazon is more business to customer. This is more business to business for like drop shipping companies or drop shipping people, where people buy a bunch of stuff in bulk from AliExpress and then sell it on their own website or just drop ship it. But anyway, one really growthy sector is actually the Alibaba Cloud. It's a Chinese cloud company which grew 42% year over year. So that's really impressive. 42% cloud revenue growth. But yeah, then they have the AliExpress e-commerce company. But we've converted the currency from Chinese to US dollars. They really do print a couple billion of net income every single quarter. You get a good 0.75% dividend yield. They're projected to make next quarter 2.9 bill, 2.17 bill of USD net income. So pretty cool. 22 forward PE, Chinese Amazon. So let's check out next. What's up? How you doing? He says AMBA. Let's check it out. AMBA stock. And I again apologize if I'm missing some stocks here. I know I'm behind. We'll look at like ServiceNow and MRAM after this. So here's Umbrella stock. This one has not done too well. Technically, they're the same prices they were back in 2020. Actually, technically, they're the same prices they were back in 2015. So they've been flat for over a decade. With not paying a dividend too. So they've actually been flat for a decade without paying dividends. Morningstar says they're reasonably valued. The company demonstrates significant revenue recovery, improved free cash flow. Or what do they do? Development and sale of low power artificial intelligence based processing, video and image. I'm not sure what that is. Let's go to their website right here. Maybe we can get a better idea of what they do. Yeah, do not share my personal information. Exploit our key applications. What the? See, I don't know what this is. Some sort of maybe developer platform. I don't know, developer resources. Anyway, let's go see if they're making money in revenue. So revenue this quarter was 100 million. Okay, so they did 100 mil of revenue, up 20%. If we zoom out, that's kind of, see, this is why they're kind of the same price as they were. The stock is the same price that it was back in 2016 because the revenue is the same as it was back in 2016. So they can't escape this market cap level because the profits haven't. And look at that. Back in 2017, they were making net income. But check it out now. This is the unfortunate part. All they've done since is just lose a lot of money. So that is probably why the stock has been flat and struggling so hard. They can't get profitable and the revenue hasn't grown too much. And they have a good balance sheet, though. They do have a good balance sheet, but I can kind of understand why this stock has been struggling for a while. Hey, what's up, AJ? How's it going? Oh, yeah, ServiceNow. Let me do ServiceNow really quick. Would you keep or sell Nebius? I would actually trim Nebius right now. I would slowly sell out of Nebius, but I just have my own thesis on it. That's just what I would do. Of course, none of this is financial advice. But here's ServiceNow right here. Here's a cool like future growth thing. Look at this. ServiceNow sets a 30 billion subscription revenue target by 2030. So in the year 2030, they're going to do 30 billion of annual revenue. And if we go to the current annual revenue, it's 13 billion. So between now and 2030, they're going to grow an insane amount at an insane CAGR, like a 30% CAGR every year, the revenue. So that's why this one has such a high multiple, but that's the issue with this company. They have such a high multiple. They trade at 40 times forward PE, which means they trade at 40 times next year's net income. I'm just scared because I feel like this could fall. Like this could still fall to like a 35, a 36 before it hits its bottom. So that being said, now's not the time to fully go in ServiceNow. Like if I wanted to buy, or if I wanted this as 5% of my portfolio, I would not make it 5% of my portfolio today, but maybe I'd make it like a small 0.5% or 1%. Because I do still like this future growth that's forecasted. Out of all the software stocks to buy on the dip, this is definitely one of the more quality. You know, they're worth $90 billion, but that forward PE is still a little pricey to fully trust yet. Anthony said, I just made 50% on Flex stock. I know that's Nvidia just bought this stock as well. Whoa, look at that earnings report. That is nuts. It went from 93 to 140. Yeah, congrats if you own this company. Yeah, you got to be up on your position. Another AI infrastructure company that I believe Nvidia just bought some shares of that stock as well. So user 941 said Broadcom. Yeah, this is a custom chip company. They're helping Amazon and Google make their TPUs, these tensor processing units. And is there any other news? Oh yeah, they own the VMware as well, which is pretty cool. But check this out. If we go to their semiconductor solutions right here, it is growing like a beast. It's up 52% year over year. You look at all the other quarters on the screen, that is the highest growth rate on the entire screen, 52% year over year. And the growth is not done here. Here's the analyst forecast. This is why I'm so bullish on Broadcom, and I actually would not trim or sell out of them. Even though they're at an all-time high, don't trim or sell them. Here's why they're going higher. Revenue in 2 quarters is going to hit 28 billion. It's never even been close to that. And not just 28 bill of revenue, but 12 billion of net income. If we zoom out, it's never even been close to 12 bill in net income. So you really want to value this company doing a forward multiple, not a trailing 12 months multiple. So yeah, look at how it gets cut in half. It's currently trading at 81 times net income, but only 39 times next year's net income because the EPS is literally growing 100% just this year. That's what's so cool. So that's why I wouldn't trim out of that one. I actually think they're reasonably valued. I wouldn't exactly buy shares now, but I wouldn't sell. YSS, he says earnings are tomorrow. Oh, cool. What is that one? York Space Systems. So it looks like a recent IPO. Space infrastructure. Looks like some sort of space company. Huh. I know a lot of the space stocks have had crazy momentum around the SpaceX IPO and the Artemis 2 launch. I wish I gave you more thoughts on that one, but yeah, we'll just have to wait till the earnings report. Hey, what's up, Matt? How's it going? Hope everyone's having a good day. We'll look at a few more stocks here. Wade said Dash stock. Yeah, DoorDash. Every time, DoorDash doesn't own any cars, but every time you make a DoorDash order, they just collect a high margin fee every time you book what is this? Amazon expands 30-minute delivery service across dozens of U.S. cities, intensifying competition with DoorDash and Uber. But isn't that for like groceries? Yeah, delivery of groceries and essentials. So I guess Prime members pay $3.99 per order, while $3.99 per order, that is like cheaper than a Uber or a Uber Eats or something. Anyway, that's just one thing to be careful of, increased competition from Amazon. That wouldn't scare me out of DoorDash though. They actually just acquired Deliveroo. If you go to their cash and investing activities, last quarter they spent $3 billion buying this Australian delivery company, Deliveroo, which actually, let's see that up here. So revenue increased 33%, driven by strong user engagement and transaction growth. Marketplace gross order value reached 31 billion, up 37. Cool. So Morningstar says DoorDash is undervalued. A resilient platform flywheel driven by record membership signups, strong network effects in North America food delivery market, and long-term margin upside from platform unification and autonomous growth delivery incentives will drive long-term value growth. Pretty cool. I love the revenue growth. Like, that's the best part about this company. If we just zoom out, revenue every quarter, not every year, but every quarter, the revenue hits a new record, and they're really profitable. If we zoom out, it used to be a tough stock to buy a year ago because they were losing 100 mil in net income a quarter. Well, now DoorDash is printing money. They're now making a couple hundred mil in net income a quarter. And analysts are forecasting it in 2 quarters to hit 330 million. It's never even really been close to that before. So they're just struggling because like the stock I think is down is because even though they're on a dip, they're still pretty pricey on just a forward PE. So even though they're growing, they still trade at 52 times next year's net income. And it used to be way more expensive before today. So they've always traded expensive, but that's the one thing that is worrisome about DoorDash is that they are still a little pricey even on a dip. And when you compare that to Uber, Uber is actually a stock I just bought like crazy. I just bought them for the first time ever. Uber only trades at a 20 forward PE, which means 20 times next year's net income. And Uber might be better because they have the ride sharing and the delivery business. How do you learn how to invest and maybe trade? Hey, the way I learned is just doing my own research, reading articles, listening to smart people. But yeah, there's no way to learn from me except watch the streams and watch my YouTube videos. By the way, yeah, watch out for people impersonating me. I've already had to ban a few of them. I sell nothing. I have no course book, WhatsApp. I don't coach. I literally sell nothing. Just give my opinion and none of it's financial advice. So how about mRNA? So let's check out mRNA because of hantavirus. Maybe they have some vaccine for that or something. I don't know. So Moderna's mRNA flu vaccine demonstrates 26% superior efficiency. FDA decision expected August 5th. Moderna develops early stage. Oh yeah, there's what you're talking about. They develop an early stage hantavirus vaccine in collaboration with U.S. Army. Oh, in collaboration with the U.S. Army and Korea University. That's pretty cool. Emerging health threats using its mRNA platform. Okay, well, let's go see how they're doing. I know most of their sales came from vaccines. Yeah, COVID vaccines. That's the tough part. COVID vaccines are not selling like they used to. Here's what the revenue was in 2021 when the vaccines were selling like crazy. But look at it ever since. Here's the tough part. The revenue growth has kind of been really bad. But looks like it's kind of recovering, but they're still losing. Ooh, I mean, that's bad. They're losing a couple hundred, actually, they're losing like 500 mil in net income a quarter. Do they have a forward PE? Let's see. That's a good question. Okay, here it is. So they don't have a forward PE, or the forward PE is negative because they're supposed to lose net income. Yeah, dang, look, this is what makes it hard to trust. They're supposed to lose 830 million next quarter, 440 million of net income the quarter after. It's just so far away from profitability that it's just like, I can see why the stock has done so bad. I can see why it's down like 80% from its all-time high and the same price that it was back in 2020. It's because the fundamentals have severely deplenished from its peak. But maybe this hantavirus development will bring some growth back, but they still got a long ways to go. I don't like that negative net income, you know what I mean? Hey, what's up, AJ? He says, ALM stock, let's do it. Almonte Industries. See you soon. Thank you for your knowledge. Hey, thanks for showing up, Happy. You're always supporting me. I appreciate you. Hope you have a great rest of your day. And what's up, Felix? We'll look at SoFi and APLD. That's another cloud one, or a data center company. Oh, Jay, remember to get to BSX and Nordic Semiconductor. Yeah, please give me the ticker symbol. If you have a stock, give me the ticker symbol. We'll check it out. So here's Almonte Industries. They're worth $5.7 billion. They've done pretty good. It's a Canadian company, so we'll convert the currency to US dollars to get a better idea. So they own a mine. I wonder what rare earth mineral they are mining. Oh, look at the future forecast here. This is phenomenal. Because if we zoom out to their current revenue, they've really had not much revenue. 18 million this quarter. This was a record, 18 million. Well, look at what it's going to be in 2 quarters. It's going to hit 90 million. That's why I always love checking the future forecast, because I wouldn't have known that the revenue is going to 10 or actually 18x year over year without that. So let's go look at their website right here. Let's see if we can find more details about the mine that they own, see what mineral it is. Tungsten. Okay, tungsten is the actual metal. Okay, that's pretty cool. Reinforcing role as America's tungsten supplier. Cool. I guess here's where their mines are. Acquired in 2016. Looks like this is in Africa. So are these some? Or no. Where is that? I don't know. Anyway, let's see where they're headquartered. They're headquartered in Montana, USA, but their mines are international. Anyway, you're just really watching out for this future revenue growth. If I was a shareholder, I really wouldn't sell. I'd kind of just wait for these next 2 quarters to see what happens. Kind of looks like the stock is kind of priced in a lot of those gains. But hey, what's up, Buzz? And what's up, Matt? He said, oh, wait, let me real quick check out. I wanted to do first. I saw someone saying this and I never got to it. I apologize. There's so many stocks. I want to get to all of them, but I'm going to forget. And there's just so many. So I do apologize. So here is GTC Semiconductor. Oh, we're actually not going to cover this stock really. It's just such a small one. If you look in the top right, they're only worth $123 million. So they're only worth $120 million. And yeah, when you're worth $120 million and you lose $10 million, that's basically 10% of the whole company. So they lost 9 mil, 13, 6. So that's tough, these net income losses, and they're highly leveraged. Look at that. They have 4 times as many liabilities as they do assets. So I can see now why the stock has been struggling and it's at an all-time low and the market cap's only 120 mil. It's honestly, it's appropriate. And I really, out of all the, what is this company? Semiconductor stocks to buy. This is not looking like the best semiconductor stock, unfortunately. So there's another semiconductor stock here. He says it's Norwegian. He says it's called Nordic Semiconductor. I don't think I'm actually going to be able to find that stock. I do apologize. Nordic Semiconductor. Yeah. It says NOD.OL. I think I'm going to be able to find that one because, yeah, it's on a weird exchange. So, fortunately, I wish I could find that one for you, but I can't. If you have another stock you want me to look at, let me know the one. We'll check it out. Matt said Tencent. So, this is my favorite Chinese stock of all time. Oh, yeah, then we'll do APLD. But yeah, this company, if you like video games, this company owns Riot Games. So they own League of Legends, they own Valorant, they own Supercell. So they own Clash of Clans, Clash Royale, Boom Beach, Payday, all that. They own 49% of Epic Games. So if you like Fortnite, they own half of Fortnite. They own PUBG. I mean, the list goes on, and they only traded at 15 forward PE. So they trade at 15 times next year's net income. Check out the net income projections. They're supposed to do 8.6 bill of USD net income next quarter, 9 billion in net income the quarter after. So I'm a big fan of Tencent. This is my favorite Chinese stock of all time. They also have a bunch of different stakes in some companies. Like Tencent owns 10% of Snapchat, 10% of Reddit, 10% of Yelp, 10% of Pinterest, like a bunch of different stocks. So I don't know. AI model achieves 10x token usage growth, becomes the top default Yuanbo app. I wonder if that's like their App Store over there. Anyway, pretty cool Chinese company. Hey, what's up, Trapper? Good to see you. So APLD, and hey, what's up, Looney? Shout out the member Looney. Hey, what's up, Max? How do you feel about Take Two? Ooh, that's a cool one with GT. Speaking of video game stocks, we'll cover that one next. So here's APLD. This is a GPU company that rents out graphics cards to cloud companies. So yeah, they beat on earnings. If we go to revenue this quarter, analysts projected 78 mil of revenue. They did 126 mil of revenue. So that's incredible. Yo, hey, user, we just looked at GCTS. It's the last stock we just looked at. By the way, I'm also streaming on YouTube. If you miss anything, you can like rewind it. But yeah, so this company basically rents out a bunch of graphics cards to cloud companies. That's why I don't love the long-term thesis, but they're beating on expectations, and the stock will probably continue to do good through the rest of the decade. Just not a profitable company. You know, they lose a lot of net income every quarter. They're projected to continue to lose a lot of net income, you know, negative 33 mil next quarter, negative 72 mil the quarter after. So that's the only tough part, is that there is no forward PE. Even Morningstar saying that. Morningstar says APLD is overvalued, massive negative free cash flow, a persistent lack of profitability, and an extreme valuation premium warrant significant investor caution despite rapid revenue growth. Yeah, that's the facts. You know what? You want to see companies that are growing their revenue and also narrowing their losses. But this is a trend for all the data center stocks. It's not just APLD, but it's also Iris Energy, Nebius, CoreWeave. They're all worsening their losses. What's this app? Yeah, hey, this app I'm on, it's a brokerage actually. It's linked in bio. Brokerage called Moomoo. So next up, let's do Take Two. Then we'll do SoFi. Yeah, SoFi next. So Take Two, this is a video game company. And if you didn't know, they own Rockstar Games, which is Red Dead Redemption and GTA. And if you didn't know, later this year, they're going to... UBS names Take Two top US gaming pick with $300 price target on GTA 6 expectations. So yeah, so UPS projecting $2 billion from GTA 6 full game sales. Pretty cool. I guess we'll get some data on that. But yeah, as soon as they release this game, it's supposed to be a top 10 biggest game in the world ever, GTA 6. It's supposed to bring them in, you know, billions of revenue and future reoccurring revenue. But here's the tough part. It's the net income. And the net income hopefully will get profitable later this year as they sell GTA 6. But yeah, if we zoom out, this company literally has not made a single dollar of net income in years, since 2022. Actually, just since 2022, all they've done is cumulative loss, tens of billions of dollars. So that's the only bad part about Take Two, is the net income right now. But it's really, you trade this off the future expectations of GTA 6 and how much money you think it'll make. NDC VF. Oh yeah, see, you're right. That's probably the correct ticker symbol. But look, unfortunately, I was trying to find it for you. NDC VF. I so wish I could view this stock for you, but unfortunately, I can't. I did try and I did type in that ticker symbol though. Like it appears, but it's just like not. Oh, we found it. Hold up. We found it. Here's another ADR. So it's NRSDY. We found Nordic Semiconductor. Holy smoly, we found it. So where are they headquartered? I'm guessing, yeah, they're headquartered in Norway. No brainer. So let's see how they're doing. So they design and sale of circuits and related solutions. How are they growing currently? So revenue grew 24%, and this is in US dollars. So revenue grew 24, and they made 10 million net income. So they're already profitable, making net income every quarter. Can we get the breakdown? Oh yeah, so Asia/Pacific is where 68% of the revenue comes from. Americas is 23%, Europe is 9%. So it's a cool semiconductor name. You know, I wish I could value them for you. 184 forward or 184 PE is expensive, and no analyst actually cover this one, so we can't see any future analyst forecast because none cover. But congrats if you own that one. They're at a crazy all-time high today, and they're profitable. What do you think of USB? Let's check out. Oh wait, let me do SoFi. Then we'll do US Bank Corp. And hey, what's up, Sora? Just joined your Discord yesterday. Loving the content. Keep it up. Hey, thanks so much for joining the Discord. I appreciate you, man. Yeah, hey, if anyone wants to join my Discord, I made it $1. I made it the least amount of money possible, simply to keep bots out. It's $1 permanent access, Or if you become a YouTube member, you also get permanent access. You can cancel right after. You get access to my Discord. Basically, it's just there if you ever, and I'll answer every question ever in there. If you have any questions for me, you want me to analyze a stock for you, I will definitely do that. I'm always happy to. So here's SoFi Technologies. This is a fintech stock, and I love fintech right now. I do own SoFi. I own Robinhood. I own Webull. I own Moomoo. I own all of them. And check out the lending revenue. This is what's crazy. Their main business grew 55% year over year. That's the highest growth rate on the entire screen. I'm actually super impressed. Lending revenue's up 55, but not just their main business, also the other 40% of their revenue, their financial services grew 42% year over year. After grew 101, after grew 85, after grew 250, after grew 265. So that is a streak of growth. I can't believe it. And that's organic. They didn't do like an acquisition to get that growth. So if you're going to diamond hand a growth stock with no dividend, this is what you want to see. Hey, remind me to get to USB after this, Trapper. The revenue grew 42% year over year, and the net income was 166 mil, and not just 166 mil in net income, but check out the future expectations. It's supposed to grow to a new record, 240 mil in 2 quarters. So that's why I'm taking SoFi serious. In all this growth, and only a 21 forward PE. That's cheaper than a lot. That's like cheaper than Microsoft. They only trade at 21 times next year's net income. And that's how you want to value a growth company. You value them off next year's net income, not trailing 12 months, because they grow so quickly. But yeah, I actually think SoFi is very undervalued. If you wanted SoFi as 5% of your portfolio, don't go all in yet and make it 5% of your portfolio today, but go ahead and make it 1%. You know what I mean? Because it's that cheap. How do you get fundamentals in your app? Yeah, hey, it should just be on the top row here. I actually have a tutorial on how to use this app. I've kind of reorganized mine, so sometimes the fundamentals will be like at the very end after options or something. But yeah, anyway, here's USB. This is a bank right here, and you get a good dividend. Banks usually have high yields. If you buy the stock right now, you get 4% of your money back, basically in a qualified dividend every year. What's the valuation? Banks always trade cheap too. Yeah, so a 10 forward PE. So you only trade at 10 times next year's net income. So yeah, wealth, corporate, commercial, and banking, consumer business bank, and payment services. So when we combine all the businesses, how did that grow? Total, the revenue grew 4.7. So it's kind of growing mid to low single digits, but they still print net income. This is crazy. Every quarter, they're making 1.9 to 2 billion in net income a quarter. But I do notice if we zoom out, that's kind of the same profits they were making in the year 2019. So that's actually why I think this bank has underperformed a bunch of other banks. Since they were making the same net income as they were in 2019, the stock price is the same price as they were back in 2019. They can't escape that market cap. So that one has just been like a slower grower bank. When if we could look at like a JP Morgan since 2019, this one is up like huge from 2019, has a lower dividend, but better total return a year, a 2% dividend on JP Morgan. I'm a big fan of the banks. So, oh yeah, Micron. We haven't looked at Micron in a while. Enlight and IQE, if you get the opportunity. Also send a link to your Discord. Oh, hey, yeah, actually, if you want to join the Discord, I appreciate that. The only way to join the Discord is actually go on the YouTube stream and go in the description. I don't like have it linked on my TikTok, but I do have it on my YouTube channel. My YouTube channel is called Nathan Robert. You can just type it into YouTube, Nathan Robert, you'll find it. And you can either just pay $1 to join the Discord, or if you become a YouTube member and you cancel after, you get permanent access to the Discord as well. It's not, you basically won't get your dollar worth of money. It's basically just if you have any questions for me or want me to personally analyze something for you, I'll help you out. So here's Micron Technology. This is your memory shortage company. This one is really, you're going to call me crazy, but even though the stock is at an all-time high, I actually suspect I feel like it's going to continue to climb higher. If we look at the forward PE, they trade at 8.5 forward PE, which means in English, they only trade at 8.5 times next year's net income. And here's what the analysts exactly are predicting: 22 billion net income next quarter, 25 billion of net income the quarter after that. So they really do only trade at 8.5 next year's net income. And I just have a feeling like this can stretch up higher. That forward PE could go to a 10, an 11, and a 12 before it maxes out, and continue to send this probably close to $1,000 a share before it maxes out. And this company really trades off the supply chain around memory. If you look at the memory, storage, SSD, RAM prices, they're through the roof. Because of the supply chain, data centers taking up all the demand, and then the supply can't meet it, so prices are through the roof. Micron positioned to benefit from potential Samsung labor strike, threatening 3% of global memory chip production. Memory chip prices surge with nano up 63% month over month and up 20% in South Korea. So crazy. AI infrastructure bottleneck drive high bandwidth memory demand through 2027. Okay, anyway, that's your memory shortage play right there. The best one, I think. I bought Nebius at 90. How would you decide if trimming is worth it? I actually would trim Nebius stock. They are at an all-time high. But yeah, this is your data center company. They had a one-time adjustment to their net income. It said they made net income this quarter, but they didn't actually. Like if you go to net income, it says they made 620 mil when they were expected to lose 250 mil. They didn't actually. They actually lost 128 mil in EBITDA. Yeah, there's just a lot of future growth, and they have a lot of big contracts. Basically, this company rents out graphics cards to big companies like Microsoft, and they just have a lot of top line growth, but not net income growth. So that's why I would kind of low key sell that one. It kind of scares me. So for real, says Nokia. We already looked at Nokia a couple times, but we'll cover it again since it's been a while. Oh, and then we got to do Reddit. And hey, Chizo, dude, thanks for those gifts there. Would you ever sell Nvidia? Actually, I would not sell Nvidia at current prices because they're only at a 27 forward PE. Nvidia is another one that's just going to continue to climb higher. Oh yeah, and here's the Nvidia portfolio. Nvidia is so big, they literally own Intel, CoreWeave, Synopsys, and they own Nokia. Speaking of Nokia, so this company reported earnings. They're up 11% on the day because of their cloud business. Where's that news specifically? So yeah, the second line here, operating profit of 280 million, beating estimates with a 49% AI and cloud business growth. Nokia and Lockheed Martin launched 5G solution for US and allied defense forces. Cool. Anyway, they're still expensive. I would not buy them here, but look at how the PE is getting cut in half. They currently trade at 83 times net income, and it's going to fall all the way to a 43. So that's really impressive. And yeah, right here, they're a cloud business. I wonder if we can like get an analyst or an AI recap. Will they do that for us? Oh, cool. Yeah. AI and cloud business sales increased 49%, generating approximately 1 billion in new orders in euros. Wow. Strong free cash flow of 629 million euros and a net cash position of 3.8 billion. They have 3.8 billion in net cash. That's really impressive. Anyway, they just really do make good money. They're supposed to make 260 mil next quarter, 395 mil in net income the quarter after, which is a good increase from 93 million the year before. So yeah, their PE ratio, look at that. It's literally getting cut in half because they're experiencing 100% EPS growth this year. So that's why the stock has been on such a rally, and not just an earnings beat. Nvidia took a big stake into them a couple months ago. But yeah, it is really expensive. I sold Micron at $300. Yo, I feel you. I have so many stocks. My biggest regrets so many times are selling out of great companies. Could you look at LASE? Yeah, let's do it. At Laser Photonics. I would like to join the Discord. Yeah, hey, I appreciate that. Hey, if you want to join my Discord, you actually have to go on my YouTube. I don't have it linked on TikTok anywhere. The only way to join my Discord is go to my YouTube stream. So you have to go to YouTube. YouTube channel is called Nathan Robert. You can just type in Nathan Robert to YouTube and you'll find it. And it's linked in the description. To join the Discord, again, it costs literally $1. Or if you become a YouTube member, you get permanent access and you can just cancel right after. But anyway, here's Laser Photonics. I would be super careful with this one. Yeah, we really won't cover this one. If you look in the top right, they're only worth $34 million. So that's just such a small market cap to trust. You know, $34 million company doing 1 to 2 mil of revenue a quarter, but it lost 9 million this quarter. Like, simple math, like it's kind of easy to understand. Let's say you yourself, you could at this market cap, you buy the whole company for 34 million. You buy this asset for 34 million. Well, you bought it and then you lose 10 million in the first 3 months, 5 million, 1 million, and you're highly leveraged. You only have 9 million of assets and 14 million of liabilities. So more liabilities than assets. I can now understand why this stock is at an all-time low, only worth $34 million. It's kind of explained by the financials. So out of all the stocks you can put your hard-working money into, that is one I really wouldn't trust it in. So MC, good to see your brother. He says AppLove, and it remind me to get to Iris Energy, Super Micro. I apologize if I'm missing out on some of y'all's stocks here. What's up, Pulse? Have you trimmed InnoData or are you holding it? No, I have not trimmed any InnoData. Here, I'll just show you that really quickly. Yeah, if I head over here to my Roth IRA, I got 10 shares of InnoData, and we're up crazy. We're up 163%. Yeah. Pretty crazy. I've never trimmed or sold a share. So anyway, here's AppLovin. I'm just letting my shares ride because it's such a small position. When you have such a small position like that, it's worth just not trimming. So anyway, here's AppLovin. This is also one of my most recent stock purchases. Actually, I'll pull that up over here. These are all of my most recent purchases in order. And AppLovin is my fourth most recent purchase. When all the software stocks fell, this one was no exception. AppLovin fell from 740 to 340. And that's when I decided to buy AppLovin. And let me share with you why, out of all the software stocks to buy the dip on, this is one of the most impressive and best ones to buy, simply because of how impressive their numbers are. Check this out. This quarter, they did 1.84 billion in revenue. And on this 1.84 billion of revenue, they kept in real after-tax net income 1.2 billion. Before tax, it was 1.44. So after tax was 1.21. That is real, which means their net margin is a 65%, which is a better net margin than Nvidia has. So if you go spend $100 on their ads, they keep $65 after tax. And so they did 1.2 billion net income. They did 1.3 billion of free cash flow. So literally, if you go spend $100 with them, 70 or $65 of that is after tax net income, and $70 of that is free cash flow for the company. They're a money printer. Literally a money printer with, 60% plus net margins. And the net income is not supposed to slow down either. Next quarter, they're going to do 1.26 billion and 1.39 billion in net income the quarter after. And that's assuming they don't beat on earnings. So AppLovin, they're down 6% of the day. Here's why I think their multiple is justified. It's a growth company, so you don't value them off trailing 12 months net income. You value them off next year's net income. And AppLovin only trades at 26 times forward PE. That is cheaper than so many other stocks out there. And this one arguably grows faster and is better in every way. It grows faster, has better margins, has better net income and free cash flow and buybacks and acquisitions and all that. So anyway, that's one of my favorite software stocks. Can you share your stocks, your most recent pickups? Yeah, it's just literally these stocks right here. These are all of my most recent purchases in order. So, oops. And so it's been Ouster, then Uber, then Microsoft. These have all been in the past. Oh my goodness. Saying I'm AFK. Okay. What? Okay, they really make you want to do the CAPTCHA perfect. Okay, sorry if the stream went out there. They made me fill out a CAPTCHA thinking I'm AFK. But yeah, literally, I bought all these stocks in the past couple of weeks. Like Uber, like there is my buy order right there. I bought Uber, Microsoft, and AppLovin all the same day. AbbVie's a great one. Yeah, these are all my most recent purchases in order. I'm still down on like Progressive, Power Solutions. And then here's my first ever purchase in here was UiPath and Zoom. We're down bad on those. Look at this. You want to see diamond hands? Look in the very bottom right. I've been owning this stock or buying this stock since 2021. So I've been diamond handing this stock for a long time. It's just kind of too cheap to sell out and take the losses on. We do have some good winners. Oh, and I love being fully transparent. You got any questions for me? Let me know. Here's my open profit and loss in here. We're only up 21.7% all time. That's it in the top left. I go to so many other streams. No one shares their like purchases and their open profit and loss on their brokerage. Like here's my other brokerage, my open. I mean, I really got nothing to hide here. This one's been a phenomenal one. This one all time is up 378% or 34 grand all time, mainly from Powell Industries and Comfort Systems. So next up, oh gosh, I am behind here. George says, fuel cell. Actually, we're not going to fuel cell. They just lose too much money. FCEL. Actually, we got a free share of this when we got this app right here. Check this out. Actually, look at that. Whenever I signed up for this app, they give you some free shares of stocks if you deposit $100. And I got some free shares of this one. I sold it at 56 and another one. Anyway, again, if you want to get this app I'm on and get some free stocks, if you deposit $100, I have an affiliate link linked in my bio there, my profile bio. Anyway, fuel cell energy, though, here's the thing that scares me about this stock and why they've done so bad over time. It's just the fact of net income. They lost 26 mil, 29, 90, 30, 30. Just for all of time, all they've done is lose so much net income every quarter. And here's the rough part. The whole entire company is worth $977 million. So when you're worth $900 million and you lose, this is over 100 mil a year, 26 plus 30 plus 90 plus 30, that's almost 200 mil. You're losing 10 to 20% of your whole company a year. So I bet there's a huge short interest on this company. Let's see. Yeah, an 8.66% of all the shares are being shorted. So I just be real careful. What should I use? I just got Moomoo. What should I use to see what I want to buy? Oh yeah, hey, I have a tutorial on my YouTube channel on how I analyze stocks in this app. There's so many cool metrics and there's so many things to discover in here. If you're looking for new stocks as well or certain sectors, Like they have a bunch of breakdowns of sectors, like if you wanted software or silver stocks or lithium or whatever. There's so many sectors, or copper. Um, oh yeah, you also get the cool macroeconomic data. Like you can literally see the Fed dot plot. So we're having an interest rate meeting next in June. A 98% chance of no cuts. July, 98% chance of no cuts. September, 90% chance of no cuts. And dang, so there's no interest rate cuts for a long time. Anyway, oh yeah, you can see what the institutionals are doing, like what's Berkshire Hathaway doing, and the super investors. All these super investors, they're worth over 100 million net worth, have to disclose every single trade that they do. So like Nancy Pelosi, who seems to just net worth, she gets paid 200K a year, but her net worth is over 400 million. That seems legit. But I will say she has one of the best portfolios I've ever seen. Google, Apple, Nvidia, Microsoft, Amazon, like Palo Alto. Then there's Buffett's portfolio, Apple, American Express, Coca-Cola. Anyway, yeah, again, if you want to get this app I'm on, it's linked in my profile, LinkedIn bio. Brokerage called Moomoo. It's an affiliate link. And if you deposit $100, we both get some free stocks. So next up, Rocket Lab. This is a great space company. They just reported earnings, and the earnings were really phenomenal. A lot of space stocks have just had a lot of momentum around the IPO of SpaceX. Yeah, Rocket Lab says SpaceX IPO could separate quality space stocks from weaker names. Okay. Rocket Lab to acquire Motive Space Systems for $60 million, plans rebranding them as Rocket Lab Robotics. And Rocket Lab acquires Mynaric AG for $155 million. Rocket Lab signs largest launch contract with 5 Neutron and 3 Electron rocket launches, secures $30 million hypersonic test deal. There's a lot of good news. Rocket Lab and Raytheon selected for U.S. space. And this is all in the past week as well. Okay, anyway, let's go look at the growth here. The most impressive part about Rocket Lab is just the revenue. And part of this is from acquisitions. They do a ton of acquisitions. But yeah, revenue's up 63%. That's the highest growth rate on the whole screen in record revenue. So literally record revenue this quarter. And not just record revenue. They lose a lot of money. That's the bad news. So they made 200 mil of record revenue, but they're still losing a lot of money. Like 50 mil a quarter, but that's no big deal considering how fast the revenue is growing and how they're beating on expectations. So yeah, their space systems revenue, that grew 57% year over year, and their launch services grew 78% year over year. Last quarter grew 79, and then 95, and then 58. So they're actually, I can see why this stock's at all-time high. It is one of the definitely higher quality space stocks. And I know a lot of crappy space stocks that you should never buy. This one's definitely one of the more quality ones. And yeah, I guess they're kind of right. Separate the quality ones from the trash ones. All right, next up, CEG. Yeah, I see some people talking about CEG. This is a great nuclear stock that's down 6% on the day. I couldn't find any specific news around this company right here. I mean, there was like Constellation Energy is waiting for the NRC's decision on the 3 Mile Island nuclear plant restart, faces potential grid interconnect delays till 2030. That's no big deal. That's one nuclear plant. Right now, even without that nuclear plant, they already right now own 33% of all the US's nuclear active reactors. It's the largest pure play for nuclear, and the valuation is cheap, only at a 22 forward PE. They trade at 23 times net income, and it's falling to a 22 to next year. And they've just crushed every analyst expectation. It was the most profitable quarter they've ever had. $1.6 billion in net income. That's after tax. Before tax was $2.27 billion, which was a crazy record, and after tax was 1.6. So they didn't exactly miss on earnings. It's just like I don't know. Like they did their Calpine acquisition. It's just sentiment around the company. I don't know. Maybe it's just an RSI retrace. I'm actually going to be buying some more Constellation Energy. Full disclosure, I do own a bunch of them. I got 15 shares of them here in my main dividend only portfolio. I got 15 shares of Constellation Energy. They pay a nice dividend too. They do dividends, buybacks, M&A. Yeah, check this out down here. We got some dividends coming in from them. How do I get added to the Discord after the dollar? Yeah, hey, it just sends you the link. You get the Discord link from Ko-Fi. Or if you want, you could become a YouTube member. It also gets you access to my Discord. So yeah, if you want to join my Discord, it costs $1. Or if you become a YouTube member, you also get permanent access to my Discord. It's not worth $1, but it's there if you just have any personal questions for me or want me to analyze a stock for you. If you need help with something, I'll just always answer your questions. There's only like 15 people in the Discord, so I like that it's a small community. So So next up, I see, hey, Mr. Gurdon, how are you? Good to see you. Yeah, hey, user46, we just looked at GCTS. We just looked at this one, and unfortunately, I had nothing good to say about this one. So unfortunately, don't join that. Don't get that stock. Ooh, Powell Industries, and you should buy leveraged ETFs. Actually, I am not really a fan of leveraged ETFs. I'd rather buy a leveraged ETF over like a option. But yeah, like right here, if you wanted to buy, or if you're bullish on Tesla, this does 2x what Tesla does. So yeah, you can kind of see that next to the price at the top, Tesla's up 3% on the day, but this is up 6% on the day. It does 2x whatever Tesla does. So yeah, these are good to trade short term if you're bullish on something. But yeah, how do I join your Discord? Yeah, unfortunately, I don't have it linked on TikTok, but if you want to join my Discord, you have to go on YouTube. My YouTube channel is called Nathan Robert. You can just type it into YouTube, Nathan Robert. It's in the description. So yeah, someone said Powell Industries. Yeah, Gurdon. I love the whole AI infrastructure. So a lot of people know Nvidia, they sell the GPUs, but instead of just owning Nvidia, also own the companies doing the HVAC work for data centers. Also own the companies doing the MEP work, which is the mechanical and electrical work for the data centers. It's really complex. Own the companies selling the nuclear power to them as well. I'm a big fan of all that. So Powell Industries had the most impressive earnings ever this quarter. Record from one data center. This isn't just installing a few switch gears. They got a $400 million data center order, their highest order ever. They have a $1.8 billion backlog with no debt. They're completely debt-free, 544 mil of cash. Look at how their cash just grows every quarter. 544 mil of cash, no debt, record backlog. They also pay a dividend. Look at this. Their dividend only costs $3.2 million a quarter. So there's so much future dividend growth. So their dividend costs $3 million a quarter. And did you know, since they have 550 mil of cash and no debt, they park their money into these 1 to 3 week treasury bills, and they literally make over $4 million of interest, $4.2 million of interest on their cash every quarter. That's what's so cool about this high interest rate environment. If you're a net cash company, you park your cash in these treasury bills and just milk interest. And that's what they're doing. Yeah, so they make 40, 50 mil a quarter, dividend costs $3 million, make $4 million of interest, no debt, huge backlog. It's just really expensive, and actually definitely too expensive to buy today. A 52 forward PE, which means they trade at 52 times next year's net income. It's too expensive to buy, but I can see why they're at an all-time high. It's not just Powell Industries, it's the whole AI infrastructure sector, which I have right here, electrical infrastructure. Hubble, that's another great one. Bell Fuse, Corning, Amphenol, Siemens, Eaton, all these electrical infrastructure stocks are doing phenomenal. And that's a sector I'm a fan of. HVAC, MEP, nuclear, electrification supercycle. So what's up? LG and Israel Lopez, what's up? Speaking of HVAC, here's another HVAC company. So yeah, they just maintain all of the mainly industrial customers. That's what I'm a fan of. Not residential HVAC, not HVAC for houses, but HVAC for huge industrial complexes in the industrial and commercial industry, which is like data centers right now. And that's what Legence and Comfort Systems and Powell Industries does. They cater to the cash-rich corporations. So yeah, they do HVAC and other MEP systems for buildings. Pretty cool. The installation and maintenance installs HVAC systems, processing piping, and other MEP systems in new and existing industrial, commercial buildings. So pretty cool. They're at an all-time high. So they're at a 55 forward PE. It is expensive, but all of them are really expensive. Like Comfort Systems as well, the best HVAC play in my opinion. They're also at an all-time high at a 46 forward PE. Here's some other HVAC stocks. I just made a new watch list for this. I got Legence on there, Madison Air, Vertiv, which just the data center water cooling, Comfort Systems, AAO Wind, which this company, I was just recently looking at them, they have a 60% rooftop HVAC market share. So they own 60% market share for rooftop HVACs. Train Technology, these all over my college campuses. I see these Train Technologies, huge industrial HVAC systems that this one whole machine, modular thing cools the whole building down. Anyway, let's look at some more stocks here before I go. I know, dang, I've been live for over 2 hours and 30 minutes. I've been having fun, though. I appreciate everyone that's here. Hey, what's up? Someone says, I remember you when you had 20 viewers. You made it. Hey, I appreciate you. Ryan said WAW. Is that a stock? I cannot find WAW. I did look it up, though. Or maybe you're trying to say, wow. Ooh, Damien said a great company. Visa. Dude, I freaking love Visa. And hey, I'm so behind on the YouTube chat. What's good, Sean? Yo, keep killing it. Hey, thanks, Sean. I appreciate you. And Mass and ZXC and Flacito. We'll check out y'all stocks in a minute here. Thank you for being patient. So here's Visa right here, a actual like quality company that's cheap. And here's why they're cheap. The forward PE is a 23. So Visa only trades at 23 times next year's net income. They legit collect royalties. Every time, those small little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. They have a 53% net margin. So look, the total revenue was 11 bill. On that 11 bill, they keep after tax 6 billion. Before tax it was 7.5, after tax is 6 billion. So they really do keep 5 to 6 bill in net income a quarter. It's insane. And the net income is only expected to go up from here. So a 23 forward PE, so 23 times next year's net income. So what are they doing with 5 to 6 bill in net income a quarter? Well, they pay a dividend and it only costs 1.29 billion. So I do think there's going to be a lot of future dividend growth. And the best part is the share buybacks. They did 8 billion of share buybacks this quarter. They spend pretty much most of their leftover money just buying back their own shares. And that's my favorite way for a company to return money to you as a shareholder, is share buybacks. What is this app called? Hey computer, this app is called Moomoo. If you'd like to get it as well with my affiliate link, I have it linked in my bio there. So DRAM, this is a huge memory ETF. So if you don't know which memory stock to pick, that was Visa stock with the 55% net margin. Yes, sir. Pretty impressive, Damien. But DRAM right here, this is the memory ETF. So if you want exposure to the memory shortage and you don't know which one to buy, you're like, do I buy Micron or Samsung or SK or SanDisk or Seagate or WDC? Well, this ETF just breaks your money up for you into all of the top memory stocks. So basically kind of just follows whatever the memory stocks are doing. Like if Micron's up 5%, most likely that ETF is up 5% on the day. And it might be a little safer because you're diversifying into all the memory stocks instead of just one specifically. So MLI stock. Let's do MLI. I'm really behind. Moeller Industries. And then we'll do, what about DXYZ and Amphenol? So Moeller Industries, kind of like Powell Industries, they're at a crazy all-time high right now. So congrats if you ever own this one. You're definitely up on your money. And even though, this is what's nuts, even though this stock is at an all-time high, they only trade at 18 times net income. And so even though they're at an all-time high, how can I be bearish on this name at still such a cheap valuation? So they do the piping systems for, I'm guessing, buildings like data centers, industrial metals, and climate, which is HVAC. Interesting. So let's see. It operates piping systems. The piping system consists of Piping Systems Group, Great Lake Copper. Okay, well, it's not going to really deep dive into it. But anywho, an 18 forward PE just seems really cheap to me. 80% of the revenue comes from the US. Pretty cool. And here's the net income. They're printing net income. Whoa. So the revenue grew 19%, but the net income grew by 51. What does that mean in English? That's margin expansion. Net margins grew 27% year over year. Wow. So I can see why they're at an all-time high. The fundamentals really are improving. DRAM has a more expensive ratio. Then what other ETF? I'd be curious to see. Oh, so here's a cool one. BSX. This is a nuclear. Oh no, this is Boston Scientific. This is a different company. So here's the one bad news. So they have this product and 4 people just passed away from it. Or here's the news down here. Boston Scientific expands recall for pacemaker models due to battery defects, and that's linked to 4 deaths and 2,500 injuries. So it sounds like a lot of lawsuits and litigation that's going to happen in the future. So that's completely why the stock is falling right now. 20 forward PE. Wonder if the future earnings will be revised down or something. But that's kind of why the stock has had such a rapid fall. It kind of starts to make sense, and it's good. I'm glad I brought this up because imagine if we didn't have this context about why the stock is falling. Most likely it's because of these deaths here. So unfortunately, that's why I'd maybe stay away. I mean, they're the most profitable they've ever been. Check that out. If we zoom out, I mean, most profitable they've ever been this quarter. But I don't know. Maybe their sales will decline after that. Let's do AXTI. All right. AXTI, and then we'll do Amphenol, and then we'll get to some of these other ones. I'm so behind. I just apologize here. Ooh, PJs. LEU is a really cool one. So, and Meta. Mitch, Meta is one of my favorite stocks to buy right now. So here's AXT stock, also pretty much at an all-time high. What do they do? So, they make the raw material substrate. So they basically collect out of the ground this raw materials that's used in semiconductors. Oh yeah, I guess here's their investor presentation. Yeah, here's what they mine. It's like indium phosphide or whatever. Uh, and the actual commodity. Oh yeah, and gallium. And the actual commodity price of these precious metals are through the roof. So kind of this, I remember, I think it was gallium specifically. Like this stock is following the commodity price of gallium. So anyway, I wish I could give you more thoughts on this one. I would be really careful. It's an $8 billion company. Oh, but they do have good future revenue growth. Revenue is going to hit 38 million in 2 quarters. And if we zoom out, yeah, it's never even been close to 38 million before. So there is a lot of future growth happening and they're going to make money. So on the 38 million in 2 quarters, they're actually going to make 5.5 million net income on that. So basically from now on, they're going to make net income every quarter and sales are going to be really growthy. So that's why that one's had so much positive momentum. I can actually understand it now. DXYZ, this is a really cool private equity fund. It's basically an ETF. So this gets you exposure to Mr. Beast, gets you exposure to Anthropic, or check this out right here. So if you buy this stock, 18% of its net asset value is Anthropic, 14.5% is SpaceX, and then it's OpenAI. And then check down here, they got Beast Industries, which is Mr. Beast's company, like Feastables in his YouTube channel. So anyway, basically these are all private stocks. So it gets you exposure to a bunch of private equity companies. Cool. So next up, let's do Amphenol. Yeah, so this is one I've been wanting to, oops, I typed that in wrong. Or here, I own this in my portfolio. Check this out. It's my second to last holding down there. I got 27 shares of Amphenol, and this is the price where I've been buying shares at, actually higher than its current price. I've been raising my cost basis, buying more shares at, because it is undervalued in my opinion. This company sells the copper cables and fiber optics to Nvidia and to Google and a bunch of other companies, but the forward PE is ridiculously cheap. They trade at only a 23 forward PE, which means they only trade at 23 times next year's net income. I think that is very fair because of the growth. Hey, Mr. Queen, it should be called company or financials or something. They like just recently updated it and changed the name of it, but it should be called company, Mr. Queen. Um, you might just have to scroll through the top here. Maybe it's at the end of the list. But anyway, their main business, that grew 87% year over year. Their communication solutions grew 87% after it grew 90% year over year. After it grew 12. So they're on a streak of growth, not just their communication solutions, but also their harsh environment solutions. That's up 33, after it grew 39. And their interconnect is up 24 after 5% growth. So incredible growth. This is their highest ever revenue quarter, record revenue. This is why I think they deserve a higher multiple than a freaking 23. Revenue grew 58% and profits grew 82 to a record profitability quarter, record margins. So I'm just impressed with Amphenol. You get a dividend too, a 0.67% dividend yield, and it's actually slightly higher than that. But anyway, I'm a big fan of Amphenol, and I do own them for a reason in this account called my buy and never sell portfolio because they're just so quality. So Mass said XENO. Let me do XENO. I actually can't find that one unless you're talking about this Australian company, which is worth 1 cent and there's no history. So I don't think that's what you're talking about. Unfortunately, I cannot find XENO. I did check for you though. I apologize there. What do you think about Rain Metal? Yeah, hey, what's up, Tim? Let me see if I can find that one. Bull barely moving up. Yeah, hey, what's up, Big? I do own some Webull shares in my Roth IRA. I'm a big fan of the fintech industry. I got Webull, I got Robinhood, I got Moomoo, I got SoFi, and we're still down 6% on Robinhood. Webull in our Robinhood portfolio. So Rain Metal, this is like a European aerospace and defense company. Oh, hey, wow. Unfortunately, they have kind of rallied down. Is there any specific news? I don't know. Let's see, Earnings Hub, do we get one of those? They're trading at a 28 forward PE, which is actually pretty cheap. So a 28 forward PE, they sell vehicle systems, weapon and ammunition, and also electronic solutions. That's interesting. And here's where the revenue comes from. So Germany, and then the rest of Europe is 42%. So Europe is basically 85% of all the revenue. Then North America, other regions, and Asia. So cool. They really do print good money. They're making a couple $100 million. This is in US dollars. We've converted it. They're really making a couple $100 million net income a quarter. And the forward, yeah, they're supposed to make $330 million next quarter, $340 million the quarter after. So that really is only a 28 forward PE. That seems pretty fair. Oh yeah, hey, I wanted to get to Lite, Lite. Yeah, hey, try not to spam there. We'll try and get to DoorDash in a minute here. We just looked at them a minute ago, so you might have to give me a minute. So here's Lumentum. This is a company Nvidia just took a stake into. Oh, Lumentum to join the NASDAQ 100, replacing CoStar Group. But anyway, there's so much future growth happening to the fundamentals, and it's being priced into the stock right now. So they sell data center components, and just look at net income projections. Net income year over year on the very left is going to go from 4 million net income to 290 million year over year on the right. So they're now going to be going from a company just barely making any net income, or from a company losing net income every quarter, to now going to be making close to 300 million of net income a quarter. That's why this stock has had such an insane rally. That being said, though, it's tough to buy it at all-time highs, and I wouldn't buy it at all-time highs at a 63 forward PE. But look at how their trailing 12 months PE collapses. Like, it goes from 185 all the way to a 63. So their EPS is going to grow like 120% year over year or more. But it's still quite expensive at an all-time high. But I can see why they're at an all-time high, because the fundamentals really are growing. What is this one? Is it still a decent time to buy Micron, or is it still too high? Yeah, Micron, SanDisk. I saw people asking about this one. I do think for the most part, it is too late to buy Micron. I would not buy anything meaningful into Micron. But here's also why. If I was a shareholder of Micron, I wouldn't be selling. I genuinely think this one is going to continue to climb up to potentially $1,000 a share, simply because of the forward PE. They traded only 8.5 times next year's net income. Here are the net income projections. They're supposed to do 26 bill of net income a quarter in 2 quarters from now. So that's 100 bill of net income a year, and they're worth 850 billion. So yeah, they only do trade at 8.5 times next year's net income. But it kind of just trades off the supply chain, and the supply chain just keeps on worsening. Samsung actually is having a labor strike right now, and it's impacting 3% of the memory chip production as well. So more issues for the supply chain around memory. So that's not great. Memory chip prices surge 63% month over month. So that's a lot of money they're going to be making in net income. So, AAOI, what is AAOI? Applied Orthopedics, and then we'll do, I bought SanDisk around 900 and I'm up. So yeah, I would be careful buying anything meaningful. Why are you so bullish on Amphenol? Hey, I kind of just deep dive into why. Actually, if you rewind the stream, I just deep dive into Amphenol. I just love the growth. The 23x forward PE is so cheap for the growth that they have. So what app are you using? Yeah, hey, War Machine, what's up? This app I'm using is linked in my bio. It's actually a brokerage where you get stocks on. So here's AAOI, new all-time high. A lot of stocks are at, like AI infrastructure stocks are at all-time highs. So they're a data center company and a cable television company. Well, they're having a lot of future revenue growth. That's probably what's being priced into the stock right now. Check that out. Revenue is going to hit 264 million in 2 quarters. I mean, it's never even been close to 264 million before, and it continues to grow very fast. Yeah. So 151 mil this quarter, it's going to grow to 260, and they're actually supposed to make 25 mil in net income on that. So they're actually finally going to get profitable, because if we go to right now, they don't make any net income. It's always negative, but if it's forecasting, they're going to make 25 mil in 2 quarters and potentially stay net income positive after that. I don't know. So, yeah, Amphenol, I'm still up a good bit, but I've been raising my cost basis. I've been dollar cost averaging up on Amphenol simply because, yeah, like the 23.4 forward PE seems pretty cheap to me. And I love their acquisition of CommScope that gets them into fiber optics. That's accretive to their EPS. So, next up, let's see. Hey, what's up, Akil? Hey, Lauren, are you still in here? Should I do Cavco? I don't know if I want to do Cavco. When's the acquisition? They already did the acquisition, or I'll show you this. Look, here's how you can tell if a company does an acquisition. You just go to the cash flow statement and you click on the cash from investing activities. This quarter, Amphenol spent $11 billion buying CommScope, and it's accretive 5 cents every quarter for the rest of the time to their EPS. So isn't that pretty cool? And that's also why they had a slight one-time adjustment to their net income this quarter because of the acquisition. It says this quarter they made 940 million net income. It was actually much higher. They just had a slight one-time acquisition adjustment because before tax they made 1.95. After tax it was 940. They didn't pay $1 billion of taxes. They just had a little one-off adjustment. Okay, let's do what's the app? Yeah, hey Fawn, this app is linked in my bio there. Brokerage called Moomoo. Hey, what's up, Red Rod? I've heard about IONQ. What do you think? IONQ, this is a quantum name, and then we'll look at DoorDash after this. All right, we'll do DoorDash and then ServiceNow. Um, IONQ, yeah, they're a quantum company. They just acquired some other companies as well. Oh yeah, Skywater. Skywater Technology is another stock. They just bought them. IONQ completes acquisition of Skyloom and Seed Innovations, secures a $39 million development agency contract. They just got a $40 million space contract. That's cool. Anyway, I still would be careful with this one because of the net income losses. They had some adjustments. They actually, look, they're losing the most amount they've ever lost. You know, they lost 270 mil of net income this quarter, 230 mil last quarter, 170, 160. So the losses are worsening, but the revenue is improving. You know, revenue's up 750% year over year to 65 million, when the same time last year, it was only 7 mil of revenue. So literally just in 1 year, they've had insane revenue growth, and it's not done. You know, according to analysts, it's supposed to be 66 mil next quarter, 67 mil the quarter after. So it's just really expensive to pay, you know, a $20 billion market cap for a company that loses a lot of money. But they do have a lot of future revenue growth, specifically from these acquisitions. They're actually doing the smart thing. They're diluting the shareholder while the stock is overvalued and acquiring businesses that are profitable. So I actually do like that. Ouster stock? Hey, actually, Ouster is my most recent purchase in here, technically, and we just hit 100% gain on this stock. I actually can't believe it. We literally bought this stock weeks ago. We only bought 4 shares because this is one of the riskiest companies out there. But yeah, wow, they're up 29% of the day. I don't know if there's any specific news, but we're up 100% now in just a few weeks. That's never happened before. I'm pleasantly surprised. This is a LiDAR company, and I'm really a big fan of LiDAR because LiDAR is what autonomous vehicles use, like robotaxis and Waymos. They all use LiDAR for their cars, their autonomous vehicles, and also drone defense. So their LiDAR is being used in drone defense. They actually have the world's first color LiDAR sensors where it's in color. So yeah, they're partnered with Google, which is Waymo. So yeah, they sell LiDAR sensor kits, and they're the most quality LiDAR company out there. Is there any news? You know, I don't think there's any news around this company. Insider did just buy some shares. I guess maybe there's some like tweet or something on colored LiDAR. I guess you hear some comments around them. What the heck? All right. What are these GIFs people are using? Oh, well. All right. Next up. Oh, Tony said Grab. Hey, Grab, this is international Uber. This is a really cool company, and Uber just bought the dip on this stock. So if we go to shareholders right here, Uber is the largest shareholder. Uber owns 13% of all the shares, and I actually like Uber more than DoorDash. If you like DoorDash stock, you'll love Uber, which is significantly cheaper because DoorDash trades at like 80 times net income, or actually forward net income. But look at Grab right here. Here's where the revenue comes from. They do the same thing Uber does, but in these countries, you know, Malaysia, Singapore, Indonesia, Philippines, Thailand. So I like that it's all international. And notice the US and Canada aren't on there. And that was why it was genius for Uber to buy the stock. It gives them instant international diversification. Oh, hey, Grab Indonesia uses that. Oh, hey, nice, Miles. Yeah, this is a pure, basically international Uber. They do ride sharing and delivery. So pretty cool. And they're profitable. They're finally profitable. If we zoom out, you know, this company used to be a hard buy, a tough sell. They used to lose, I'm messing this up. They used to lose money every quarter, like 100 mil, 60 mil a quarter. But now the company's the most profitable they've ever been, you know, at triple digit growth rates to the net income. So I'm really impressed with Grab. They're just still slightly expensive because they're just now getting net income positive, but oh yeah, let's do CVC. Oh yeah, Cavco. So Cavco, and then we'll do DoorDash and some of these other names like, Roblox too. And then I got to end the stream. I've been live for almost 3 hours now. But yeah, Cavco, this is a home builder. They build factory built homes, and they trade at a low valuation, 18 forward PE. And that's kind of what the home builders trade at right now, kind of a low multiple because interest rates are high. So if you look at any home builder, even like a Lennar, a lot of them are struggling. Like, look, so if you're wondering why Cavco stock is struggling, it's because of the home builders are. Like Lennar, they almost have an identical looking downtrend chart. So anyway, I like this one the most though because, again, 18 forward PE, but the best part is they're actually debt free. They have no debt whatsoever, and they used to have 400 mil of cash, but they just bought a company, so their cash pile went down, but it was solely because of an acquisition. Yeah, look, they spent $180 million buying American Homestar this quarter. So that's why I love this one. They literally are debt free. They make 50 mil of net income a quarter and like 50 mil of free cash flow a quarter. So it's just right now the environment with high rates make this one a tough buy. So actually, yeah, Cavco's a really cool one. They do factory built homes and no debt. And there's something. Oh yeah, they have a backlog, like a $300 million backlog. So that's nice as well. Next up, what's up, Sean? Um, hmm. News must be coming on FCEL. It is breaking out since you talked about it. Oh yeah, we covered that one a minute ago. How often do you check your Discord? Well, hey, I've been streaming for the past 3 hours, but I check my Discord literally every day. So yeah. If you want to join my Discord, it's literally $1. It's not worth $1, but it's literally just there if you have any questions for me or want me to analyze a stock for you or need help with something, I can help you out. But yeah, to join the Discord, it costs $1. You have to go on my YouTube stream and join it. It's in the description of my YouTube stream. Or if you become a YouTube member, you get permanent access to my Discord, even if you cancel the YouTube membership. Yeah, YouTube channel is called Nathan Robert. You can just type it into YouTube. Hey, Cuts, how about Unilever? Dude, thanks for those gifts earlier. Yeah, we'll check out Unilever after this. Thanks again. And Shireen, or I'm probably saying her name wrong, but Shy, thanks for those gifts too. If you have a stock you'd like me to look at, let me know. So here's Roblox. I actually would not buy Roblox. I'm actually concerned about the fundamentals. So I can actually understand why the stock has had such a massive downtrend. Here's the good news. The good news is they have really good daily active users. They have 132 million daily active users, up from 97 million the same time last year. So crazy good daily active users growth, but the bad news is crazy bad net income losses. The losses are worsening as well. They're losing 200 to 300 million of net income a quarter, which is tough because of this balance sheet. They're already highly leveraged. They have a lot of debt they need to pay off already, and the problem's only getting worse. They're just adding to their debt problem every quarter. So that's the one scary part. So yeah, their daily active users are growing, but the net income losses are terrible. I guess it's because, children don't have credit cards. And it looks like Roblox facing thousands of cases under investigation, potential multi-district litigation looms. Oh, well. Just the net income, they're so far away from profitability. It's a tough one. Hey, shout out the member Jeff Mack. I hope you're having a great day, man. He says BBY. Yeah, we'll look at Best Buy after this. I know that's a nice dividend company. Unilever. I don't know the ticker symbol. Oh, you might have to actually find me the ticker symbol. Because I type out the company Oh, yeah, it's UL. Okay. So they own so many nice brands. Like they own Lipton Tea. Actually, if I go to their website, I wonder if we can find the list of brands that they have. Yeah, they're in so many different industries, food. Oh, they own Axe body spray, I guess. So Unilever and Samsung launched for. I want to find out their list of brands. Okay, here, I guess the list of brands or some of the more staples. They own Hellmann's Mayo. Oh, well, anyway, a bunch of grocery store products you've probably heard of before. Let's go see how they're doing because they're a European company and will convert the currency to US dollars. They traded only a 16 PE, which means they trade at 16 times net income. Yeah, so they're in personal care products, food, beauty and well-being, and home care. So I like how diversified that they are. This kind of looks like a Simon Says ring, if you know what I'm talking about, with the 4 equal quadrants. But yeah, US is 20% of the revenue. And here's their bottom line, and this is in US dollars. They really are making like $1.5 billion of net income a quarter if you average it out. They added Schwartz McCormick now. Oh yeah, hey, if you look at any of these similar stocks, like if we look at Unilever stock, they've been struggling for a while. It's not just a Unilever problem. You could look at like a Procter & Gamble. They've also had kind of I probably like Procter & Gamble as maybe a little bit more higher quality of a purchase, or like a General Mills, more of a food company. General Mills is struggling. I joined to get some insight into the American market. Just started. Oh, hey, cool user. GIS, General Mills. Oh, hey, what's the ticker symbol for Aptera? You know what? I'll find it for you. But yeah, look at like General Mills. The stock is also at like a multi-year low. It's the whole industry kind of struggling right now. So APTERA, Aptera. Oh, here we go. Aptera Motors. Looks like they just IPO'd not that long ago. A very small company. So it's definitely one you want to be There's definitely one you want to keep as a small position because if you look in the top right, this whole company is only worth $94 million. And what we're looking at Best Buy after this. Oh, and it looks like it's a startup. So if we go to the revenue, it says no data because this company has never sold anything. They've never sold a product or a service. They lost 15 million. I'm actually really starting to dislike this company, sadly. And I don't mean to be bearish, but I mean, simple math here. The whole company's worth 90 million. When you lose $15 million, that's 15% of the whole company they lost in market cap. And like it could be justified if they had like some good revenue growth, but they have no revenue. So I feel bad. It looks like this is maybe a Chinese company too. I don't know why the language is like that. Here's their website though. Driven by the sun, aims to build the most efficient solar electric vehicle. So they're trying to build a solar electric vehicle. I'm not sure what their margin will be on that, but anyway, interesting there. Kind of competing with Tesla. It's a low margin EV industry, but the concept seems cool. The website's cool, but when you realize that they have no revenue, lose 15% of the market cap, there's really high bankruptcy risk. Yeah. But that is a cool story. Solar powered electric car. So here's Best Buy. This one's kind of been a nice dividend play. They haven't had much stock price appreciations because technically Best Buy is the same price as they were back in 2017. But here's the thing. So even though the stock is flat, every year you get a 6.8 or really a 6.9% dividend yield. So you've had no stock price appreciation in 10 years, but you've gotten 7% of your money back in a dividend, qualified dividend every year. So that's kind of what you're hoping for. You get the 7% dividends, and then you're praying for like 1 or 2% stock price appreciation on top of that, which historically it doesn't really do. Maybe you'll get 1% stock price appreciation on average, but yeah, you get the 6% dividend and you hopefully 1 or 2% stock price appreciation for a total, 8% total return a year. So yeah, they sell, we all know Best Buy, they sell computers, phones. I just bought a MacBook at Best Buy. So, hey, I supported you. We're also like a rewards member. Yeah, nice little 6.8% dividend. What's the net margin? Net margin they have is so kind of a low margin business, a 2-3% net margin company. Is MBLY the same as Ouster? So Mobileye Global. So Ouster does a bunch of LiDAR. Let's see what this company does. So this one also, Assistant Systems. Let's see. Okay. They're trying to get my cookies. Maybe they also do. Mobileye secures major DMS. Is that The Weeknd or who is that? Bruh, they really want my cookies. I'm just trying to view your website. Fully modular architect skills. So yeah, maybe they do. I don't know. They're not coming out and saying LiDAR, but maybe that is what they do. Yeah, some sort of driving assistant thing. Mobileye. So let's see how the revenue is. So revenue of 588 million, and they lost 3 billion on that. Was that real? Okay, so they didn't actually lose 3 billion, but they do lose like 100 mil a quarter. So they do kind of lose a decent amount, which is unfortunate. But yeah, look what that did to their balance sheet. That was real technically in GAAP. So they lost 3.8 billion net income. That money had to come from somewhere. So look, their cash or their assets went from 12.5 billion of assets down to 8.7 billion of assets. So they had a huge cash loss. That money has to come from somewhere. They do have no debt though, so that's great news. They have literally no debt. I don't know. I'd be careful with that one. I wish I could give you more thoughts on that one. I apologize. Hey, yeah, Brendan, how's it going? He says Pagaya. I wish you give me the ticker symbol, but I'll type it in for you. Or oh no, PGY. Oh, thanks for that. I do see the ticker symbol. I'm just slow. It was up in the chat. My bad there. How about Caterpillar? Yeah, hey, we'll look at Caterpillar too. So PGY. Oh, hey, and then what's up, AJ? We'll look at. Did you buy TNGX? I did not buy that company. Is Nike even worth it at this point? I don't personally think so. I did actually recently fully sell out of Nike. The growth story is just gone. So that's the part that scares me. So here's PGY Software. This is one of the cheapest software stocks on the market. And that's why I think the risk to reward is so good buying this stock right now. Not financial advice. Simply put, this company trades at 0.8 times 1 year revenue, and they trade at 7 times net income, which is ridiculously cheap. And here's the net income projections. They're supposed to make 32 mil next quarter, 39 million the quarter after, and the whole company's worth $1 billion. So when you're worth $1 billion and you make over 100 million of net income a year, that really is trading at only 8 times forward PE, which is really cheap. So that's what I'm impressed about this one. They did slightly miss on revenue the past 2 quarters in a row. So they've missed on their top line, but they've beaten on their bottom line, which means they're actually expanding margins. Yeah, look at that net margin expansion right here. Used to run at a negative net margin. Now they're running at a positive net margin. Pretty good. So yeah, it's 7 forward PE. I don't see it getting much cheaper. What stock have you been loading up on the past week or month? Really, I haven't been doing much buying this past week and month because all the stocks I really want to own, like the AI infrastructure stocks, have run up too much. Like same with like the Google, Amazon. I did all my buying like on the dip. Like I spent thousands like a month or two ago. But so for this past couple weeks, I haven't really done any buying. But here are all my most recent purchases from that week or from that month ago. I bought AppLovin, Microsoft, Uber, and Ouster, all for the first time ever. Literally weeks ago. Like here's the buy order, all the same day. Here's the buy order on things like the first day of March, or I mean of May, or maybe it was April or whatever. Basically, I bought these all a couple weeks and months ago. And also been buying a bunch of McDonald's. It's a dividend stock right here. It's kind of a boring blue chip, but it's like the only thing on a dip right now, these food stocks. So I bought even some fractional shares in McDonald's. All right, next up, what is AJ said TNGX. He says, I don't understand why it keeps going up. So Tango Therapeutics, they're on my watch list, so something must have impressed me. So they're up 8% on the day. Let's go figure it out. So revenue growth and revenue this quarter. Wow, that was crazy. 53 million of revenue. If we zoom out, that's actually the highest revenue they've ever had. So 53 mil of revenue, and they made 15 mil of net income on that. That made their balance sheet, kind of fortified their balance sheet. But what I don't like is the future expectations, because analysts are forecasting only 500,000 of revenue and 1.5 mil of revenue the quarter after. So I'm actually going to remove this one from my watch list. It's a clinical stage startup. So I guess here's their website right here. Yeah. I actually don't like this one, but I don't understand why they're going up so much. Maybe there's some good news. Maybe they just announced they got FDA approval on one of their products. Yeah, maybe that's why they gapped up right here. They announced some good future guidance. Who knows? So there's probably some context I'm missing there. All right, last two stocks here. Look at ServiceNow and we'll look at CMPR. Then we got to go. Meta has been lagging behind some of the other tech names. Yeah, Meta has been. And I'm a big bull of Meta. So here's ServiceNow. This is it has some interesting future forecasts. Look at this at the very top. ServiceNow sets a 30 billion subscription revenue target by 2030. So for the full year 2030, they project 30 bill of revenue. If we go to full year 2025, it's only 13 bill of revenue. So it's going to more than double. Like organic revenue is going to double in just 5 years. So they're growing at a nice 30% CAGR, which is why I think this one has such a high multiple. That's the one issue with this company I have, though. It is the high multiple. If you look on the right, they traded a 40 forward PE, so still 40 times next year's net income. I sadly think it might still be able to go lower to like a 35 or a 36 before it bottoms out. So that's why I wouldn't go crazy yet. I would nibble on ServiceNow, but I would not go crazy because the market is still punishing these software names. And this is one of the top dog software stock to slap around. So that's why I'd be super cautious when I nibble on this stock. But yeah, there's a lot of good news. ServiceNow, AWS expand after their marketplace transactions surpass $1 billion. I mean, ServiceNow and Accutensor launch forward deploy engineering program. I mean, there's so much bullish news actually. Cool. What was this one? CMPR. What is that one? Simpress. Huh. So I've not heard of this stock before. Unfortunately, this stock has not done too good. This stock is the same price that it was in 2014, just like 12 years ago. So the stock has been flat for 12 years. Let's see if we can figure out why. Let's see if it's explained in the financials, which it usually is. And sorry about the lag here. Luckily, I'm about to end the stream anyway. Dang, I didn't even realize time's been flying. We've been streaming for over 3 hours. Yeah, hey, if y'all are enjoying, please leave a like on the stream if you haven't already. It helps me out. Remember, I sell nothing. I have no course book, WhatsApp. I don't coach. I sell nothing. Just want to give my opinion. So a 17 forward PE is actually pretty cheap, but they're at a 50 current PE. So they do Vista, Print Brothers, The Print Group, National Pen. Is this like a news group or something? Or delivering high quality, affordable quality products quickly and conveniently. Vistra, well, let's go to their website. Maybe we can get a better idea of what it is they sell. We help millions of businesses build brands, stand out, and grow. Oh, so maybe they do the actual packaging for like apparel. They'll make business cards for you. So stuff like that, helping out businesses with their packaging and marketing. Cool. Okay. How are they doing in terms of fundamentals? And it's kind of a commodity. Yeah, so they are highly leveraged. If we go to the balance sheet down here, they do have more liabilities than they have assets, which is not great. That is more leverage than I'd like to see. And the net income's choppy. Like, it's not just consistent net income every quarter like how I like to see. It's like they make net income, then they lose it, then they make money. But if you average it out, let's go to annual here. Annual net income. Yeah, even on an annual point of view, they used to make consistent net income. Like every year they make like 30, 50 mil. But now recently it's kind of just been choppy. I don't know. That also is probably why the stock is the same price that it was back in 2014, because they were making more net income than they were. They're making less net income than they were in 2014. So the market cap can't escape this range. But it could be a fun little swing trade or something. Does SIRCIO Holdings show up? I type in CIRCIO. Looks like it's raised NOK 19 million. Yeah, I can't find that one, unfortunately. I did type in that name. Maybe if there's a ticker symbol, I can find it. So yeah. Do you like Vistra? I do like Vistra. I actually like Constellation Energy a little bit more than Vistra Energy, but yeah, they own like 6 nuclear reactors. It's like probably the second or third best nuclear play. With a 16 forward PE, it seems pretty attractive at only a 16 forward PE. So anyway, that is going to wrap up the stream. I'll end this with a quick stock portfolio update. If y'all want to hit the follow button, I appreciate that. I love being fully transparent. I'll share with you every stock that I own, how much I'm up and down on every stock, my recent purchases, anything you want to know. I go to a bunch of other streams and no one ever is fully transparent. So we'll start with my Webull portfolio, my risk on account. We're only up 22% all time in here, but we're up 0.09% on the day. Ouster, we just hit a freaking, spread the wealth. You still in here? Have you seen Ouster today? You were doing the TA on this one. This one's up 28% on the day. But yeah, what's the biggest movers besides that one? So Futu, I bought hundreds of dollars of this stock literally on a 5.11 and today's 5.13. So 2 days ago, I bought $423 of this stock. This is one of my favorite companies. Actually, if you didn't know, Futu, F-U-T-U, is this app, this brokerage I've been using the whole stream, publicly traded. So that's what's cool about Moomoo. And if you want to get that app, it's also linked in my bio. I also own the stock of Moomoo. But yeah, let's see what's down on the day. I know software struggling. Yeah, like UiPath is down 5, AppLovin's down 6, ClearSecure is down 4, SoFi 3. No big deal though. Here's our Moomoo portfolio. Someone said, can you explain, what's up Malachi? Can you explain your interest in Comfort Systems? We had a stock pitch yesterday and a group did them. Dude, congrats. All Comfort Systems. They do all the complex HVAC and MEP work for data centers. They have a $13 billion backlog, no debt, and crazy beats on numbers. I mean, this is why the stock is at an all-time high. It's not just momentum. It's because the fundamentals are really beating. And this is also why I'm not trimming or selling the stock. Look at what the analysts forecasted. 2.39 mil of revenue. They did 2.86. And the net income was even better. They expected 240 mil. They did 370. And that was a real beat, like not some one-time gap adjustment, like the real EBITDA beat by 170 mil. Everything's just at a record here. Organic revenue, like not from an acquisition or anything, revenue grew 56%. So revenue's up 56. Net income is up 118, which means margin expansion. Their net margin grew 40%. 40% margin expansion after it grew 47%, after it grew 28%. So this company is on one of the best streaks of like net income growth I've ever seen for a company. Like genuinely. Oh yeah, check this out. Hey, fun fact. Here's my portfolio from 1 year and 1 month ago. Look at the very top. I had Comfort Systems. I had 11 shares. This was how 1 year can change everything. I was down 16% on Comfort Systems. And look at Powell, the second one. I was up only 110%. All I did since then is I bought more shares. So yeah, now I got 12 shares of Comfort Systems, about one more. And I have the same shares of Powell Industries. We're up 1,000% on them now. But yeah, anyway, Comfort Systems, every metric just beats every quarter. Revenue hits a record. Net income hits a record. No debt. fortress balance sheet. They raised their dividend quarterly. You don't see many companies do this, but look at the dividend. It was 80 cents, and then it was 70, then it was 60, then 50, then 45, then 40, then 35, then 30. Like every quarter, you're getting paid more and more than their last payment. Actually, I'll pull that up. I think I can show my dividend history here. Let's see, filter, corporate action, dividends. So yeah. Oh, or I should pull up Comfort Systems dividends specifically. So check this out right here. I know no one, I'm ending the stream here anyway, so I know it's kind of lingering on here. But yeah, look at the dividends on the right. I got $8.40. The quarter before I got $7.20, and then $6, and then $5.40. I didn't buy any more shares. They just organically rose their dividend like that. Pretty cool. So yeah, this led us to our portfolio growing year to date 75%. On a return money weighted, we're up 75%. Comfort Systems is up over 100% year to date. Powell Industries is up over 200% year to date. Amazon's up like 20. Coca-Cola's been struggling a little bit, and Amphenol's been struggling a little bit, but I'm actually about to buy more Amphenol stock. Do you see an opportunity still, even being up so much? No, I actually would not recommend buying. I would not recommend buying Comfort Systems at current prices, or even 10% off current prices. Like we need them to fall to like 16 or 1700 bucks before you'd want to start a position. But yeah, I'm also not trimming or selling. Even though they're expensive, I'm also not trimming or selling. So hey, what's up, question one? I feel bad I'm ending the stream right now. So anyway, yeah, that's this portfolio. Did I go over my, oh yeah, we also have a Robinhood portfolio. It's called our dividend only in the top left because every stock in here pays a dividend, but most of these are dividend growth companies. You know, I got Meta, Constellation Energy, McDonald's, and Google. Google's up 3.9. I mean, that's incredible. Just from 1 year ago, Google's up 149 and we're up 145. We didn't exactly time the bottom. They've just done so well in just 1 year, like a lot of these stocks. Like same with Comfort Systems. I bought Comfort Systems at an all-time high and they just have done so well this past year. Look at Powell Industries. Someone actually said people were calling me crazy. Here's where I bought this stock. I bought all my shares of Powell Industries. It's kind of hard to make this chart look right. Look at that. There's my buy order at the top right. I bought Powell Industries after I saw this chart. It gapped up here. It gapped up here. It gapped up here. And I just decided to buy my shares and it just continues to do well. Sometimes whenever a stock hits an all-time high, statistically, it's followed by a cluster of new all-time highs. And that's also same for when a company hits a new 52-week low. Statistically, it's followed by a cluster of new 52-week lows. So that's why I just don't trim or sell companies when they go up, or specifically in this portfolio, it's called my buy and never sell account. Because in my other accounts, some of my biggest regrets ever were selling out of great companies. Here, y'all want to see a huge L? I used to own Palantir. Guess what? Palantir today, one share of Palantir is 130. I sold my shares of Palantir at $8 for a profit. I bought it at $7.45 and I sold it at $8.30. So I sold it for as little profit, like 20% profit, and I would have been up over 1,000% more. Same with Robinhood. Robinhood, I took gains when I was barely up. I used to own 55 more shares of Robinhood on the left here. I bought it. Here's my buys. Look at the bottom. I was buying this at $9, $10, $8 a share. I sold it at $36 a share. And today it's worth 77. I wish I never sold those shares. So anyway, some of your biggest regrets will be selling out of companies instead of making or buying bad companies. You know what I mean? Anyway, see you soon. Hope you have a great rest of your day. If you haven't already, please leave a like on the stream. And the best way to support me, if you wanted to support me, it would mean more than a donation if you would just subscribe to my YouTube channel. I'm trying to build up my YouTube account, trying to build up my subscribers and my viewers over there. Because yeah, this TikTok stream has been cooked. I don't know if you can even see that, but apparently our TikTok live has been restricted for body exposure and sexual behavior. So we lost our For You page eligibility and the TikTok stream has been cooked. But anyway, if you want to support me, best way to is watch from YouTube. My YouTube channel is called Nathan Robert. Hey, thanks for following. Yo, Cuts, I'm actually going to give you a follow. Thanks so much for following my YouTube channel. Anyway, see y'all soon. Oh, and just know I'll never follow or DM anyone on. I don't sell anything. I have no course book, WhatsApp, Telegram, Discord. I'll never follow you, DM you, nothing like that. No coaching. So anyway, see us. Thanks again. 3 hour, 20-minute stream. This is crazy.